compliant. He knows the rules. He knows everything. But he also, most importantly, knows how to trade. And that's why he's been doing it for so long. And that's why I'm glad to always have him back here on the Cyber Trading Expo. And, and like I said, he's going to talk a lot about, options trading, futures trading, has a different analogy, a different style that I do, where I specifically day trade, which I'll talk about after. But he does do some day trading. But you could see with the great presenters that we'll have, we're going to show you exactly how to, not more or less how to make money, but more or less how to control not losing it, and a lot of the psychology part of it. So with that said, I'm going to pass the mic over to you, Price. Everyone enjoy. Thanks for being here, and enjoy the Cyber Expo.
Thank you, Fausto, my friend. It's great to see you, and thank you for including me. It's always a pleasure to be on these CTU Cyber Trading Expos. Let me go ahead and make sure I'm able to share my screen okay on the presentation I want to share with you here. Let me pop it up here one sec. Screen 2. Make sure that this is coming through loud and clear, and you can see my screen. We're going to talk about options trading today. It's one of my favorite things to do out there in the markets. So let me know in the chat that you can see my screen okay, and we'll get it rolling here. The beauty of this too is you can do this with very little cash up front. You could literally take as little as $400 a trade, turn it into potentially up to an $1,100 profit on using these $1 options. I call it Grand Slam options. And I want to make sure, let's see, saying no sound. Let me make sure that you can hear me on the chat. Okay, so we should be good. Okay, so just a reminder, of course, as we go into it, I've got a lot that I want to share with you over this next hour. I don't want to eat into Fausto's time here, who's going to follow me, that everything I'm sharing with you is for your information and education only, of course. Nothing here should be considered a specific recommendation of buy or sell any particular investment. You are 100% responsible for your own investment decisions. This whole thing is about empowering you to make better decisions in the heat of battle. But not all Big Trends products and services are appropriate for all traders and investors. Big Trends, we don't personalize any financial, tax, or legal advice to any individual. What we do is we take our research, we send it out as real-time email and text alerts to our subscribers and our Grand Slam option service. And then you decide how you want to put it to work, how many contracts, etc. So just do consult your tax advisor too. So what we're going to talk about today is a lot of these examples. If you don't know it, me, like Fausto said, I've been trading for over 30 years. I graduated from Duke University in '89, made the classic early mistakes, thought I was a genius, and basically got locked into positions. And that's the thing that I would really encourage you, and everything that you learn and implement in your trading and investing is stay flexible. Don't get locked down on an idea. If the market's not validating that you're on the right side of the trade, get ready to move on and move it into something else. So I launched Big Trends in '99 and been blessed to be inducted in the Traders Hall of Fame in 2007. With a lot of other giants in the industry. So I consider a lot of what I do standing on the shoulders of giants, frankly, and you can do that with these webinars. It's all about the research has to show, the data has to show that we have an edge in the markets. If we don't have a quantifiable edge, we should not be trading. Okay, so this is not gambling. This is creating a probabilistic advantage and then taking advantage of it again and again and again. So it's baseball season. I'm glad that we're getting back to some normalcy, and the baseball analogy really applies well to trading, because you could go for singles. A lot of people do go for this first base kind of small stuff, try to just get, hey, if I get some singles, I can gradually build my portfolio. And you could do that. And there's a place for that, but not here, not what I want to focus you on. So scratch out first base. Just literally, you were thinking too small if you're thinking that way. I want to get to at least second base, which, as in baseball terms, is a double. We're looking for at least a double in our trades here with this Grand Slam options methodology. That's 100% gain on your investment. If you get a double on anything, whether you trade stocks, options, or you name it, Bitcoin, whatever, if you double an investment, I always tell my subscribers, and I always personally take half of my investment off the table at a double. Why do I do that, and why should you do that? Because it gets your risk capital back in your pocket. So with these cheap options that are trading for $1 or less, that means $100 or less per contract, controlling 100 shares. They're quoted at $1. It would be $100 to control 100 shares. These are very cheap options. These are options that you can get tremendous leverage on, We're going to talk about that. We're going to talk about gamma. We're going to talk about the indicators. But the philosophy of gradually taking money available to you, only taking half of your investment out at double, gives you the other half is what we call a free trade. That now you can shoot for bigger gains and not be freaking out if the market starts to reverse on you and then you panic out and take a 20 or 30% gain and then end up leaving a bigger 200 or 300% gain on the table. So we shoot for a 200% gain, a triple. Third base in baseball terms is a triple on half of our remaining investment when we're going for our targets. Our final one, when we clear the bases, the proverbial four bagger, 300% gain on your original investment. If you started and you invested $100 a contract, you'd be up to $400 a contract. 4 times your money, 300% gain. Close out the rest of the trade at the four bagger. So that's what we're going to walk you through, and we'll walk you through examples here. So like we got a full Grand Slam all targets achieved example on AMD, Advanced Micro Devices. As you know, AMD, the chip stock's been eating Intel's lunch. Stock's been doing phenomenally well here over recent years, and this is one that we scored on where all of our indicators lined up very quickly. This trade moved, and so one of the things that we do recommend is that you're able to get your alerts to not just your email, but to your smartphone, so you don't miss a trade. When we send one out during the trading day, we don't want you missing it. One of the things I also would point on this chart is we're going to talk about several indicators here. The blue line's the CCI. It's a commodity channel index. I use it on a lot of stocks. It was setting up for a potential buy right here. This is called a setup point. Notice, same thing with percent R, the Larry Williams percent range indicator. That was setting up here for a potential buy. If they had followed through above that first bar's high there, you can see it's right into these upper bands. It tries to go through there the next day, fails by the close, fails again. You're just turning it off and you're just saying, good, I avoided a fake out. This last indicator here, the green line, is what we want to see is the ADX. And when the ADX starts to trend up here, that green line starts to trend up right in line with how the percent R and the CCI had set up. They didn't follow through the next day, but they did follow through right there. That was on July 22nd. Now, at this point, we're saying all systems are go. All three indicators are saying this thing's ready for takeoff. We buy it there the next morning when the stock's trading about $62. We buy the August 75 calls. Now, this is not a current recommendation, mind you. It's a past example, but the idea here is that, look, the stock's at 62. We're buying a 75 strike call for $100, $100 a contract. Why would anybody go 20% out of the money? Because that's where the cheap options are, and those cheap options can get much more expensive, much more quickly. And a lot of my subscribers and new folks coming in get confused and think, so that means that it has to trade past 75 for me to make money? And the answer is no. In this example, the next day, we're taking 100 and 200% gains when the stock's up to about 68. And then the day after that, on the second day, it's up to about 72. And we cashed out our final piece at a 300% gain on the second trading day after. So we didn't even get to the strike price, and yet the option went from $1 to $4 in about 48 hours. So the point is, when that happens, we say, okay, look, now it's time to ring the register. We take the money and run. Sometimes they can keep going, but the idea is let's not get greedy here. When you think about what's the big picture profit potential out of Grand Slam, when you go back and look at a very conservative allocation of saying we'll never put more than $1,000 in a trade, we won't compound it. We assume no commissions because now commissions are next to nothing. And you look at, we probably average about 100 trades a year, but say, look, you shouldn't be paying much, if any, commissions here, and saying $1,000 a trade would have turned into 16 grand. So you could do this with as little as a $5,000 model portfolio. And of course, you make a profit of 16 grand, you turn 5,000 into like 21 grand and change. Knowing that past performance doesn't guarantee future results, we always expect we could do better in the future from what we've learned, but there are chances we can do worse too. So we got to realize the markets are volatile. Our job is to help you manage that volatility and take advantage and harness those sweet spot zones. You'd be up 325% from service inception 2017 to just the other day. So the point being, we did just make a new trade out there. So we've got a fresh one that we're hopeful we'll keep adding to that. But the idea is, it's about finding these opportunities and leveraging it. So one of our recent trades we just doubled here this past week is Moderna calls. Now, this is a great example where when we bought Moderna calls, we bought them when the stock was trading about just under 170. We bought a May 230 call. This is not something I'm telling you to get into, because we've already gotten a double in the first half of our position the very first day we were in it. That first day we got in, the stock popped from about 168 up to almost 180, like 179. It went up more than 10 points intraday. And we rang the register and said, we bought it at $1. We'll sell it at $2. Thank you very much. Time to have the free trade. Now Moderna can do whatever it's going to do, and we're okay with that as long as we follow our risk parameters of, okay, at a certain point, we will shut this trade down even before expiration. I'm going to talk about that too. But look, all the indicators are already signaling. The CCI was the last one to come on board. Percent R came on board when it crossed up over here. That was the percent R. So if I put an R by it, that's one indicator. The ADX came in like the next day. So that's the A coming in. And then the CCI came in right here as we got into the trade. So basically all three of the indicators, percent R, ADX, and CCI are all on board then when we got on board. And that's when the power of that trade started to kick in. Now, when I talk baseball and I think of home run leaders, I have to think back to the Sultan of SWAT himself, Babe Ruth. What's interesting about the Babe, because I remember watching Hank Aaron break the Babe's record in the 70s when Hank hit his 715th homer. Babe hit 714 home runs, but look at how many strikeouts he hit. 1,330 strikeouts, didn't hit. Struck out. 3 strikes, you're out, 1,330 times, and yet he was a 6-time, you could even say 7-time World Series champion. I didn't count that first year with the Red Sox when he didn't play at all. But basically, and teams that he played with, 6 world championships. Now, he said, I like to hit big or miss big. I don't. I try to minimize that missing big. Sometimes we're going to miss. But we'd like to go ahead and say we've got a rule that I'm going to talk to you about. It's not a price stop. It's what I call a time stop. That is a much more effective way to manage these cheapy options that have a lot of swinging and volatility. If you put price stops on these, you'll probably fake yourself out of a lot of good trades. I'll show you an example of that in a minute. But I use anything, as I said, standing on the shoulders of giants. I use anything that I found that tests well and trades well. And so one of them is the Commodity Channel Index, the CCI. This is obviously developed by Donald Lambert in the early 80s to trade futures. But I've shown it to work on a lot of big growth stocks. Now, the reason CCI is a really valuable indicator to me is that most indicators that you and I look at are looking mostly at closes. If you look at a moving average, it's close to close. A 200-day moving average, that's the last 200 days closes. It doesn't care about highs and lows. Even percent R, the Williams indicator we're going to talk about, Larry Williams percent range, that looks at the closes essentially, even though it will look at highs and lows as an absolute basis, but it's looking day to day at the closing levels. What CCI does differently is it says, you know what, Lambert said, let's take the high plus the low plus the close divided by 3 to get a typical price for that day's action. So if we close at the high, of course, we're going to have a quote unquote more overbought condition if we get a lot of those higher closes. Overbought is not bad. If there's one thing I would like you to take out of my presentation today, it's rename the word overbought, because most people hear overbought and they think that that's gone too far. Overbought is, most people have been taught overbought is bad. I could not disagree further. Most of my best trends that I've made on the upside have been overbought and stayed overbought. This is something that's a massive mind shift change. We're talking about a quantum leap that you can make in your performance potential, because what's happening is if you think overbought is bad, you're not going to look at the best stocks, the best ones you could potentially be trading. You're going to pass, and you're going to end up trading the also rans. I know Fausto loves horse racing like I do. My family grew up in thoroughbred horse racing. When I was at Duke, I told my dad I was switching from a equine veterinarian major to go learn how to trade the markets and switching to finance. And he said, "Are you crazy?" I said, "No, it's a lot more conservative than breeding thoroughbred horses and racing them." But the reality is, when you breed horses, you do it to win. You don't do it to run second, third, or last. You do it to win. And yet most people don't win in that game either, because one out of 10 horses can win. You've got to be on the best of the best. The Pareto's principle, the top 20% of the people had 80% of the wealth. It's the same thing here. The top 20% of your trades are going to generate 80% or more of your profits, especially in options buying. So overbought is a plus, okay? It's not a minus. Oversold is where things can get ugly, because let's face it, the institutions are dumping stocks that they know bad news is coming, and they're going to go ahead and get the heck out gradually, and you don't want to try to buy something that's that oversold. It's usually got more bad news coming. So Facebook was another example. You can see back in March last month where we had the April 320 calls. Notice we buy about a month out. Facebook here was trading in the neighborhood of about 280-ish. We've got the percent R already confirmed. We've got the CCI coming on the next day. We've got the ADX already trending up. We don't see that green line trending up. You see that nice uptrend there. That's the sweet spot of that little phase of that move. Okay, we didn't get all of it. We only got, you can see a couple of days of it, and we got 102%. And then we followed the trailing stop, really got the second piece out at 85% and change. So we bought them at 99 cents. That's $99 a contract. To control Facebook shares, so 100 shares would cost us 28 grand. So you see the leverage potential here. 28 grand of stock you're controlling for under $100. I mean, you're talking about 280 to 1 kind of leverage potential. It doesn't take a big move to get paid. We didn't have to get to 320, the strike price we bought. Stock went from about 280 up to about 295, almost 300. And we're getting paid with a double, and very pleased. Actually, it was just about a 10-point move to get a double. And you see it later went on for another leg up after pulling back, but we were glad to book it before it pulled back. So a lot of these big stocks, you would think they're too big, that they don't move fast enough, right? But the beauty is, because of the liquidity of these, I can get in and out of them very easily. And like Mr. Softy, this is before the earnings disappointment it just had and sold off some more today after yesterday's sell-off post-earnings. We were long gone before that. Microsoft was just starting to launch as it kicked off here with percent R, as it kicked off with CCI, as it kicked off the ADX trending. And we said, okay, look, the stock's near the end of the day. We said, stock's trading about 225. We're buying about 10% of the money. We're buying a Feb 250 call at 88 cents, $88 a contract. We took 104%, then 206%. Our third target of 300 did not get reached, and as it trailed back down, we got out at 122% on the rest. In a matter of 5 trading days, 100, 200% in 5 days. That's exactly what you should strive for, is catching what I call the sweet spot of the move. Notice, that's where you want to trade right there. You don't want to try to pick the exact highs and exact lows through a bunch of this chop. That chop's almost impossible to trade consistently. Anybody that, maybe Fausto can do it as a day trader. I know he's a lot better at that than I am, but I put exits through all that stuff and say, don't even touch it. Don't even try. Notice up here, we're going to talk about these bands here. These are my big trends bands, this purple line here. When it gets through there, now it can start trending to the upside. That's the band is really valuable to me. So why do you think these signals are so powerful? Let's dig a little deeper on the indicator. So the next one is the ADX, average directional movement, developed by Wells Water. Same guy that developed the RSI. Fausto's asking for my Derby picks. They will be up on my site later tomorrow, Fausto. So Derby comes early this year. First Saturday of May is May 1st. It's a late Derby too. It's like near 7 p.m., really late this year. So, but not much more time to drink mint juleps, right, Fausto? Basically, you see here, ADX is the average directional movement. This is the kind of trend indicator that tells me, okay, things are starting to heat up. These DMI plus and minus lines, what that means, DMI plus is like net new highs, DMI minus net new lows. You can see from this uptrend chart here, net new highs on the positive panel are going up here, right? Net new lows are going down. So if we get DMI plus rising, meaning you're making net new highs, you get DMI minus falling, no new lows. What's that called? That's called an uptrend. ADX is going to rise as a result of that. That's what it's going to pick up, is the trend, okay? So when you look at this, you say, okay, we're looking at what Wilder did that was different than a lot of other people looking at daily ranges. He said the true range has to encompass gaps. When you get a gap open to the upside, he would say take the prior day's close, add that up against the high, and that's your true range for the day, not just the high low of the next day's bar or candle. So that's why it's actually encompassing more total price action. That's why ADX becomes a really nice trend and momentum indicator. So let me show you an example of really quick momentum like this. This was AstraZeneca back when they were last year when they were about to announce their COVID study results with Oxford University over in England. We said, hey, I read a lot. I'm sure that you do too. It's important to be aware of what's coming up, not just earnings, but news like this, and say, look, it's just starting to break out. We just have had this clearance above my big trends bands here. just breaking out right here, right as the ADX starts to turn up and trend off a relatively low level. That's that green line there. So all systems are go here. We say, okay, buy. When the stock's about 58 bucks, we say buy out of the money. By the 65 calls, we paid 83 cents. Even with that news coming out, and we buy the August options that aren't going to expire for another month, we don't need a month. We only need 3 trading days. That was on a Wednesday. By Friday into the close, everybody's expecting good news, rightly so. We got our double and our 200% targets. And I even had some people asking and said, shouldn't we book all this in the weekend? I said, what do you think's the likely news going to be when they report their results on Monday morning? You think it's going to be bad? Probably not. It wasn't. It was very positive, and you see that we got the gap up, and we cashed it out of that last piece there, 357%. And this was a classic buy the rumor, sell the news kind of event. You hear that phrase kicked around a lot, but we said, look, okay, that news is out there. That's as good as it's going to get for a while. We cashed it in about 63 bucks for 357% on that last piece. And then it dropped on back down to below where we got in a week later. So this is about timing is everything when it comes to the markets. I love when subscribers are getting this experience. Tim Q said, great ACN trade, kudos. It's fun to get on board those and take advantage of them. So when we start laying the pieces in here, the third and final leg of this stool is what I call the big trends bands. This is another way to visualize my friend Larry Williams' percent range or percent R indicator, which is shown. I left the color in red. That's supposed to be bad, right? Red is supposed to be a stop sign, right? I left it in red because that's how a lot of stuff's color coded in a lot of popular platforms is going, uh-oh, watch out, it's overbought. Should you be watching out? If anything, you should be going, hey, pay attention, wake up. It's time to trade this to the upside. So if anything, that should be an alert that you should be interested when it breaks out of these big trends bands. Notice we cashed in on Baidu on that particular move in about 4 trading days, 100, 200, and 300%. The big trends bands give me that visual of, are we stuck in this range here? You can see range time over here, right? So this is not what I want to trade. I literally leave those ranges to everybody else. I'm not drawing very well on this cursor today, but trend is what we're after here. Range, you should say, no, thank you, exit out. Big plus when we get into trend, okay? Bigger the trend, the better. That's the name of my site, bigtrends.com, because big trends happen on any time frame. When I launched big trends in 99, people said, oh, you must be trading multiple years out. I'm like, no, big trends happen on intraday charts too, even for day traders. But the key is we're looking at classic swing trading here, looking for things that can be in that top 20% of the readings, give you 80% plus of the results. So a closer look at Baidu now when you lay all the pieces together. Look at the ADX. It was trending first in this example back here. CCI and percent R didn't come on board until about here, and we bought that next morning. Okay, so 1, 2, 3, all of them coming on board there. 3 legs of a stool to not wobble, right? You have 2 legs of a stool, you're going to fall over. We don't just take 2 out of 3. That ain't bad, but it ain't good either. We need all 3 of them to work for us, and then we cash it in. This would be an example where you say, oh, you left money on the table, it rallied for another couple of days. Don't care. Happy with 200, 300% targets in 4 days. Okay, so the beauty of this is it's really simple, really effective. Now, most people, when you look at the options model, most people jump all over and look at theta. That's the time decay piece. Most people say, oh, there's time erosion in options, therefore you should be a seller, not a buyer of options. Actually, options are a zero-sum game. For every person who's winning, somebody's losing. Sometimes you're winning when you sell options. Sometimes you're losing if you sell options and those things explode against you the wrong direction. You do put credit spreads in market tanks, you got problems. So it's a zero-sum game. You can win buying or selling options. When I launched Big Trends in 99, I'd mainly done it by high delta, looking for options that had about an 80 or more delta. My trading has evolved over the years because what I've learned is that as I get these trends right, high gamma is where you're going to get the best bang for your buck. They're usually somewhat out of the money options where you say, as it go from out of the money to at the money to in the money, the rate of change of delta, you pick up deltas faster, where it goes from, say, a 30% delta out of the money, then at the money it's a 50% delta, then in the money it's a 70% delta. You gain those deltas a lot faster than if you buy a 70% delta and maybe goes to a 75% delta on a multi-point move. You're just not picking up that much bang for your buck already buying an in the money option. It's safer, but it's not as profitable. Okay. So a few more examples of quick options trades. And this one's really important. Morgan Stanley. Because Morgan Stanley is one where I was wrong at first. Okay. And this is why I mentioned the time stop. because, okay, everything's all systems go here. There's my setup bar that was coming back there May 26th. May 27th, it closed above there. And so we were saying we need to buy right here. So we're buying right here off of this first open. Notice from my first buy there, I'm wrong for 2 days. 1 and 2, I'm in the hole, more than 50% loss. You say, oh, that doesn't sound good. More than 50% loss. Nobody wants that, right? Of course, nobody wants that. But I'm following my system, saying I bought the June 49 calls when the stock was just about 46 and a half, almost 47. Bought the June 49 calls. I paid 95 cents, 95 bucks a contract. So that's why we say, look, you could even do it with as little as 4 contracts, and you'd pay like 380 bucks plus any tiny commission, a buck or a buck and a half or two. So the idea being that, look, you say, okay, if you look at this and say, okay, I'm wrong after 2 days. If you'd taken the minus 50% loss here, you'd be really kicking yourself, because count out at least 5 days. We're grinding back up. By the 5th day, we're back to where we got in. If we're maybe even a little bit above. And so from this perspective, we're saying, look, it's still crunch time. If that had dropped back down on the 6th day or after, I got to get rid of it. But on the 6th day, you see we're rallying even more. 7th day, look at this. 7th day, we gap up. We open about $51. So we've got a June 49 call. This is still got another couple weeks before expiration. And we're saying, look, we've got a situation here in which we're actually getting bigger than our expected profit, because the first gap up, we take half out at 247%. The next piece, we're trailing our stops at this point, saying 224%. The final piece, stock trailed back down a little bit intraday. We took 146%. So we averaged more than a triple on that trade. That's more than our usual average. So from this perspective, you say the time stop is the answer, not the price stop. I know some people say I always use at least no worse than a 50% stop loss on any option trade I do. And I say, well, then get ready to get whipsawed and fake out. Think about it. If you were down 50, you took it out at minus 50, and then you left plus 220 on the table, that's a 270 percentage point swing on your whole position. There's nothing I hate worse than getting flushed out of an overall good position that ends up going on to be a winner, and I got flushed out at a loss. The time stop of 5 days gives us a chance for that trade to work. Same thing with Zoom here. You see Zoom here was giving us this is kind of what I call a retest trade. The retest bar came in, and I was watching the intraday charts going, this thing's starting to stabilize and hold up here. And so I bought recommended Zoom calls back here coming off the pandemic last April 7, we said buy the 200 strike calls when the stock's about 115. And one of my subscribers said, are you nuts? It's way too far out of the money. And I said, look, we don't have to hold it to 200. Remember, as it rallies here from 115, they even had some bad news about security issues. Microsoft and Google were no longer going to use the Zoom platform. Guess why? Because they had competing platforms, right? They're trying to establish their own. And so you see here that, we bought into that. You see it rallied back immediately. And by the 6th and 7th day, we're getting 100, 200, 117% on our final piece, and done in 7 trading days. So you don't have to be on these trades long to get cashed out. So what part of the time curve should you be trading? Most people would say, oh, look, buy out here at 120 days and you won't get nearly as much decay. The decay is a tiny sliver of what it is in the last 30 days. And what I say is, if you do that, you're guaranteed to pay too much for your option premium, and you're going to crush your leverage. You're going to really not, because think about it, you have by definition at least one earnings report tucked in there where you're going to have to pay for earnings. We don't like to trade right in front of earnings with this strategy. We'll trade them potentially many weeks ahead or right after earnings. One that we just bought had just had earnings. The earnings volatility was sucked out of it. Somewhere about this 40 down to 30-day range is about where we like to trade going out to the next month's expiration. Because if you're in it for 5 days here, it's still a pretty small sliver of decay here. 35 to 30 days, still a manageable sliver of decay. Sure, it's a little bit. One of the things we don't want to do is under 14 days, we don't want to hold positions. So I will not hold something if it's got less than 2 weeks to go before expiration. Win, lose, or draw, there's too much risk in those final 2 weeks, especially on something that's near the money with a lot of fast burn rate. You see how fast that decay is going now. It's accelerating into a waterfall into the 0-day expiration. You don't want that. You see the kind of names we like to trade here? A lot of the big names, the Microsofts, like I said, I just traded Moderna, Wynn Resorts, Las Vegas Sands, Visa, MasterCard, course, Mastercard has earnings here, but bottom line is that we're not going to trade them right in front of earnings. A lot of big tech, all the FANG stocks, Nvidia, Baidu, Alibaba. Pick your big name movers. We're going to watch it. Some of these, like Tesla, unless they split it again, Tesla's off my list because a lot of times the market makers won't even have a $1 option available on Tesla a month out. It's like go hundreds of points out of the money and pay $5, $500 a contract. They just don't give you that option these days on a Tesla. It's moved too much, and the market makers don't want to get burned. So, but the beauty is that a lot of these still trade very liquid fashion. Remember, I showed you I got out too early on that other Baidu example. This is a great example where a touch early was for the best, because this is a different Baidu trade. It came out with earnings in this period here. So you look at the earnings, and then it basically went through a consolidation, kind of a little triangle pattern. And it's just breaking out of that. ADX is still trending up. We've got all systems go here. We're getting into that. When the stock's trading here, you can see about 250 to 252. We're buying the June 290 calls going out there about 5 weeks before expiration, maybe 6. So we're buying pretty far out of the money, more than 10% of the money, but we're paying $100 a contract. But you can see in 4 days, there's our double. It's gone from 252 to almost 270. In the 6th day, we're getting our 200 and 300% gain. And you see, 6 days, we got all those targets. On the 8th day, though, of course, somebody probably emailed me and said, you should have held on. They held on, and it's gone from 270 to 280, and they're making even more money. All right. 9th day, kind of not so sure there. And look at this 10th day gap down. 11th day, you'd be below where you got in. So greed is not good. Sorry, Gordon Gekko from the Wall Street movie. Greed is not good. You want to make sure you've got a plan for booking your profits gradually. That's why the 100, 200, and 300% gains are really nice. They're sensible, and they're achievable in a lot of cases where we can get that, book it. If it doesn't, after that 5-day time stop, we blow it out. Salvage what we can and move on. So it's great when you get new subscribers like Srikanth coming in and saying, great start. He said, great to start the service with a winner. First time in over the last year trying many different services, he was able to do that. I can't guarantee that, but I always love to see it. And of course, folks like Robert Romine wrote in, he was not having success in the markets. He started using one of my techniques like percent R, started really seeing a lot of success. Saw more 100 and 200% winners than he ever had in the past. My highlighting here is total portfolio almost tripled. And even his stops were pretty manageable, pretty small in comparison to his gains. That's part of the secret of trend trading success, folks, is you've got to take bigger gains and smaller losses. Most people, because of what I call their scar tissue, you don't have any scar tissue if you traded for a while, right? No, we all do. You have losing trades. You build up this kind of sense like, oh, I won't let a winner turn into a loser again. So then you get antsy. You start taking 20 and 30% gains, saying you can't go broke taking a profit, right? Maybe not. If maybe can have a problem if you take small gains and big losses. Okay, we want to do the opposite, take bigger gains and manage our losses appropriately. So I'm sure you're getting the concept by now, but let's give you even one more quick example, how even a small move on a big name stock that Apple, gave us a double in just 4 days. Now, this was all systems go here. It doesn't look like that much. It's kind of going through this choppiness here, but you know what? It was confirmed across all of our indicators here. And we said, okay, get into when stock's trading here in the 130-ish area. We're buying about 10% of the money. We're buying the Jan 145 calls, 10% overhead back there in about the, you can see right before maybe about the 16th of December. A little more than a month before expiration. First few days, we're wrong. By that 3rd day, we're going to be down because the stock's down a little bit on us. Even back to flat by the end of the 3rd day, you say, okay, that's not going to be going so good, right? We're losing. We're counting out those 5 days, right? But then 4th day in here, put a 4 on it, spikes up on news of an iCar that they're talking about, and the stock doesn't move that far. It goes up to about 135 intraday, 134. So we're not even seeing the stock move that much, and our 88 cents is up to about $1.07. What is that? We need about $1.80. We get just about $1.80 on the exit for a little more than 100% gain, 104.5% gain. The second piece is stopped out for like a low 40s% gain. So we still average about a 70% gain for less than a week. and then you see it just kind of goes into nowheresville after that next few weeks. So there's a pattern here, folks. There's a structure to the markets, and our job is to help you keep finding these repeating patterns again and again and again. So, when we think about, some of the key elements that go into our Grand Slam option service, the catalyst has to be there. So for me, the catalyst is, let's find that technical pattern. It's not one or two indicators. It's the big Williams percent R, the big trends way, as I call it. Overbought is good, remember, with this approach. CCI, same thing. Commodity Channel Index, overbought is a powerful sign. Let's face it, institutions are the ones driving the market, not you or me. Whether you and I are trading 10,000 or even $10 million, we're still relatively small fish in the institutional ocean. We've got our own ponds, but the institutions are the ocean. They're the ones that are truly driving the market. So we need to see all these things kind of come together, and they will help drive these trends because they can't buy their position all at once. They will typically buy their position more gradually. It's one of the reasons I believe that these trends persist. That you'll see this news hit, and you think, isn't it an efficient market? Don't these things get all accounted for right away? And you say, okay, this is a great example where it fits. Marguerite had a quick question. She said, didn't know you could stay in an option once you take profits. So here's the difference, Marguerite. I'm really glad you asked. We're taking partial profits. That's why I say you've got to have at least 4 contracts with what I'm teaching you. If you start with 4 contracts at $100 a piece, that controls 400 shares, 4 contracts will be $400. Okay. Of those 4 contracts, when you double your money, I'm saying only sell 2 of those 4 contracts. You still have 2 more contracts left. Then you triple your money, sell 1 of your remaining 2, and then your final one, if we can get to that target, you sell that at that 4-bagger, that 300% profit. So it's about gradually taking your profits on parts of your position rather than being an all or nothing thinker. So the beauty of this is that trading, folks, like life, trading is not black or white. There are lots of shades of gray. I've got kind of a grayish slide here. Well, the beauty of this is that, these shades of gray is what allows you to kind of gradually take that money off as the market makes it available to you. Or if we see something we don't like, then we'll say, exit the rest of the position, time to go. Let's move on to something else. So there can be good earnings and good fundamentals behind these names, but the technical pattern is what has to be repeating again and again and again. Now, it takes a little bit of faith here to say, so you're buying out of the money options. Aren't those the riskiest options? Because if nothing happens, you could lose all of your investment. And the answer is yes, they are the higher risk options where if nothing happens, you could lose all of your investment. That's why we have rules like the time stop that says, okay, we're buying about a month out. And then after 5 trading days, which is about a quarter of that time, if nothing's happened, if it's not working, the stock's not moving in our favor, we say sayonara. Exit first, ask questions later. Okay, so we'll tell you, we'll never leave you hanging. We'll always tell you, time to get out, time to move on. It's not doing what it should be doing. Let's salvage what we can. If it's a 20%, a 30%, a 50% or more loss, fine, salvage it and move on to the next opportunity. That high gamma, though, is where you can really get the massive home run potential of options working for you. So Steve says, do you move your stop to break even when the first target is hit? You're in about the line of thinking where we are, Steve, that yeah, we want to start moving our stop up as we get that first target. So that's in the neighborhood of what we will do. And then once we hit our next target, we'll move the stop again. So we give you these regular email alert and text alerts to your smartphone. It's okay, here's where you move your stop to this time, then the next time. And by the way, when you become a subscriber, I'm going to walk you through all the extra bonuses that I'm going to give you today here in just a little bit. So you can see that I'm going to give you some rule sheets that'll give you, as you sign up, all of the elements that you have to that you might want to be aware of. You actually don't have to do anything other than wait for our email and text alerts. We have a lot of people like, what chart platform do I need to be on? Do I need to follow your charts? I'm using a lot of TradeStation charts. No, you don't have to have TradeStation. You don't have to have Thinkorswim. You don't have to have XYZ platform. You have to have an email address. You should have a text alert. You should have a smartphone, right? Most everybody does. If you don't, you're at an extreme disadvantage against the rest of the crowd, right? So with that access, you'll know exactly what to buy, and then you can do it on Robinhood or any other platform for that matter that you can place an option trade on. So a lot of good questions. But the time stop, this is an eye opener for a lot of people. And everybody's always thinking about price stops. But you say, you know what? If you put your price stop out there to get tagged, sometimes the market makers, especially on at the money and out of the money options, where it's completely priced based on how much time's left um, and on the volatility component being the most important component. Sure, the price of the stock matters too, but the volatility little adjustments that a market maker can say, oh, take the volatility down a few points, boom, that option stop gets hit, you get taken out, and boom, take those volatilities back up, the options right back up, even with no price movement. I'm not saying the market makers are that diabolical all the time, but the reality is, if you're close to a stop, and I had a friend of mine who, quick little story, Rex, from here in Kentucky, where I am, and he now lives in Singapore. He retired full time after being on the Chicago floor trader for a number of years, and he said that he made most of his money by what he called the morning flush. I said, "What's the morning flush?" Sounds like he's going to take a break. Well, he said the morning flush is actually where the traders would wait right off of the open and see where all the average Joes and Janes said that they know right where the key stop level is. They put their stops just a few pennies under those very obvious stop levels. Those traders would see the market come down there. They would buy from those people right into those quick flush out stops. The thing would snap back up. They'd unload it, and that first half hour to hour make some money off of all those other traders who just got flushed. Have you ever been flushed? I've been flushed more times than I'd like to admit. I hate being flushed. And in fact, that's why Rex was able to go retire in Singapore, because he made a lot of money off of the other traders getting flushed. So don't be a flushy. um, you know, be one that takes advantage of this by using the time stop. Sorry, I couldn't help myself there with that. But the idea is that so you don't have to have any one platform chart. So I get a question on that. It's like you can use. I mentioned I'm using TradeStation. I've used it for a long time, since the early '90s, because it gave me the ability to test data. I like Thinkorswim's platform a lot too. So those are probably my two favorites. But you don't have to have those to trade. You can trade on any place. I'll probably start doing more on Robinhood because it's so easy to do it right from your mobile phone. So got flushed more than get floated. I like that, Bill. Very good. Okay, so with these windfalls, as you get doubles, as you get triples, as you get that final 300% gain, you take advantage of those gradually. Sometimes what you saw on those charts where we'll get them in the same day, and that's fine. Um, I remember one trade, Akamai, like we got all three targets on the seventh trading day, and it had just barely hung in on our 5-day time stop. And then it got all three targets all in one day when it had a huge move. That's fine. But this investing of percent of your capital is an important one here. Okay. Once you see the potential of this, don't get greedy. Don't start loading the boat. Don't say that you've got to all of a sudden now become this big shot trader. This is totally scalable. Let your portfolio keep growing steadily. We say 5 to no more than 10% of the capital that you're trading gets allocated to any new trade. On those performance results I showed you earlier, that we were being very conservative and not showing you any compounding. We're just saying that no more than $1,000 a trade. But if we compounded it, we could show it a lot bigger. I also do weekly video training, so you know exactly what to do. MJ says, how far out of the money do you buy the call option? How many weeks out? Usually it's about a month out. It could be 4 to 6 weeks out, even 3 to 6 weeks out. But usually that 4 to 5 weeks out for expiration is kind of our favorite sweet spot. So we're getting kind of past the point of the May expiration and starting to look at June expirations right now. Also, how far out of the money? It depends on the situation. You see, some of these like wild and crazy stocks like Moderna, we were going out there, probably 30% of the money. A lot of times it'll be about 10% out of the money, but sometimes it could be less. One that I just recommended earlier this week was only about 3% out of the money. So it's an amazing kind of opportunity you have to take advantage of depending on the way the stocks move. Now, we get a lot of questions, and this is kind of a good segue because I'm starting to answer some questions here. And let me answer a few before I tell you about our special offer that we've got for you for Fausto's group here today. So is it for options recommendations? Yes. This is not for stocks. It's simple. There are no spreads here. It's just buying a call or buying a put. We never turn it into a spread. We never do anything complex here. And the beauty of this is what size account you could do it with as little as $4,000. Because we're saying you could start with as little as $400 a trade, and that would mean with a maximum of 10% allocation that you would need a $4,000 account. Okay, so from this perspective, it's really all about locking this down. And locking it down for very low prices. We will never pay more than $1 per contract. That's $100 to control 100 shares. So therefore, to get 4 contracts minimum per the capital target profit rules I share with you, that's at least $400 a trade. So you could do it with less, but we say $400 a trade is really the ideal minimum to start with. How many trades a month? Usually it's about a trade or two a week, or about 6 to 8 trades a month. How long will it been to trade? It could be as little as a day, like I showed you on Moderna, up to a few weeks. But usually it's in about that sweet spot of about a few days to maybe just over a week. How do we send the trades out? Via email and via text alert. So text alerts are available when you get signed up here. Do we give you the stop and target levels? Like I said, time stop, profit target levels, yes. Now, what about other extras you get? We give you educational materials in your Big Trends Access, which we'll talk about here in a sec. And we give you some bonuses here today. Bonus 1, we're going to give you the Grand Slam rule sheet. Okay, so this will give you all the settings, the specific parameters, how many days on percent R and CCI and ADX and all kinds of other stuff. Bonus 2, my weekly video updates. I did one on Monday. That's sitting in there, as well as past archives. You can go back and study those. I'm giving you an extra special bonus today, which is I'm giving you my Gamma Options Boot Camp. This is a multi-hour digital on-demand course where I teach you more and more about all the elements that go into why these high gamma options are your best strategy here. Now, as you saw at the beginning, what I mentioned is that while past performance doesn't guarantee future results, if you just followed this here, going back to the beginning of 2017 for our Grand Slam options portfolio, putting no more than $1,000 into a trade, you'd be up, and like even on a $5,000 account would be up more than fourfold, 325% profit, 16,000 in total profit dollars with zero compounding, just putting in never up to, but never more than $1,000 per trade. So if we can only buy like, $800 worth, or it'd be actually more like $900, 900 and change dollars worth, that's where we'd stop. We'd never cross 1,000 with this model portfolio. Now, what we've done for you is all those little pieces of bonuses that I just mentioned, the rule sheet, $197 value. My Gamma Options Boot Camp, people pay hundreds for that, $297 value. My weekly updates over the course of the next year would be a $497 value. Just call it $10 a week, just for that regular kind of hand holding that we do. But you know what I'm giving you today? Usually it'd be an annual offer here, but I'm going to give you something extra. If you buy a year with me today, I'm going to give you an extra year on me. We call this a BOGO special. I usually only do that around the holidays for the most part. I'm going to give it to you as part of Fausto's group today. So buy this. That would be usually $4,000 a year, or about $8,000 value right there alone. All this together, almost a $9,000 value. I'm going to take it down today to just $997. This is a one-time investment of $997. Okay. I can't assure you that the price after this 2-year package will be that low. Probably won't. But I'm giving it to you today when you go to members.bigtrends.com/GSO24. That's GSO, the letter O, 24. Or you can call our 800 Big Trends line if you have any questions. Thanks for posting it up there, the good folks at CTU. Quickly, I know I've got a few minutes left. We keep it really simple on our order page, and then I'll answer a couple more questions here. We keep it really simple. So when you go to that page, this is what you'll see. Our Grand Slam Options logo. You've got the 2 years. It usually would just show 12-month subscription. We've bumped it up for you to 24 months here with this special offer for way under the usual price of even a year. It's just $997. There's no future billing. It's a one-time investment. This is going to get you at least 200 trades over the next 2 years, over the next 24 months. When you break it down per trade, that's less than $5 a trade for a trade that could potentially make you thousands. And even on a small investment, we said like a $400 investment could turn into as much as a $1,100 potential gain. So all you do is you review this, and we've got everything spelled out here. Our terms and conditions are down here. You can click that link and review all that. Click that you've read them, and then pay with a credit card. We take all the major credit cards or PayPal. So, a lot of people these days like to use PayPal. It's really simple. Go through those clicks. If you have questions, you can always call us toll free at our 800 Big Trends line here, which is spelled out, or you can email clientcare@bigtrends.com. We have live people always standing by during business hours to help you take advantage of that. So it's an insane amount of value for some ridiculous, you can see 85% off plus, approaching 90% off. It's just really a phenomenal way to get started. The great thing too is that you've got time to start studying that stuff, study the boot camp, soak in that knowledge. You don't have to rush and all that stuff. So Robert asked, will I get stopped out by day trading rules? You will not with us. We don't have any problem with day trades. Once in a while, like Moderna, we cashed in a double on the same day. Hey, if the market's going to get me a double on the same day, I'll take it. But the odds, we usually don't have more than about 2 or 3 positions open at a time in this portfolio. We keep it very concentrated, very focused. So, the beauty is that we don't have any worry about doing that 4 day trades or more in a 5 straight day period. So we don't worry about that here. You don't have to worry about that with big trends. So Mark, we're not doing auto trading at this time. So basically but the beauty of this is that it's something where you have time to get into these. Typically, if I see an option that's trading 80 cents by 90 cents, I'm going to recommend something up to $1. I'm going to give you some space to get into it. Also, we deal with really liquid stocks. I showed you Apple, I showed you Microsoft, I showed you Facebook, Moderna. These are names that are trading many hundreds, if not thousands of contracts a day in that strike price. So the beauty of this is that it really makes your life simple. You're not worried about some obscure stock, or that some of these other services. I know you see something and you're like, oh, I can't even get in at the price I recommended. It's already moved because they put too many subscribers into the service. We don't do that. We keep the service limited and strictly limited so that we're not going to have too many people in. We're not going to have too many contracts chasing. And that's important. And so that's why that liquidity component is important. The names I showed you earlier are liquid active names where I know I can move it in here. This is if you could buy a quarter here as low as we would take it, Neil. And a quarter, if you instead of putting GSO 24, if you put GSO 3, I'll give you a quarter on GSO 3 for just $197. But that's for 3 months. Here you're getting 24 months. So $197 times 8 quarters would be obviously pushing towards $1,600. Am I doing my math right? No, I'm not. It's a $2,400. Sorry, had to add that extra 100 in per month. $2,400 almost for 8 of those 197 specials. You can see it's much better value to lock in the 2-year BOGO special. Do they come, Tapas says, as straight calls or puts? They do. So from this perspective, it's very much of a KISS principle. Keep it simple. What I've learned in my 30 years plus of stock and option trading, I'm sure Fausto can attest to this too, because he's coming up next here in a few minutes. I'm cognizant of the time here. Is it basically the simpler I keep things, the more profitable I am. For me, it's about getting the stock right first. The options are a vehicle for being right about the stock moving quickly. Okay, I know some places, some option strategists will say, oh, I take a database of thousands of options and I sort through and I buy the 0 or 1 percentile volatility and I hope that they pop back up in their volatility and I make a little money that way. That's one way to play the game. There's lots of ways to play the game. My experience is that the options pricing model does not factor in big trends. The options pricing model, in fact, doesn't assume hardly any trend. If you know how the guys who won the Nobel Prize for creating the Black-Scholes options model, does anybody know the story about where a couple of those guys went after they won that Nobel Prize back in 1997 for the options pricing model? Do you remember the big hedge fund that they went to with their acclaim? It was a very famous hedge fund situation, and it was called Long-Term Capital Management, LTCM. What happened to long-term capital management within a year of those Nobel Prize winners creating a $6 billion plus hedge fund? Does anybody remember what happened to long-term capital? It blew up. It went belly up. It almost took the financial system down. Lehman Brothers was rumored to be bankrupt at the time. It only took them another decade or 11 years to truly go belly up. By selling out of the money options and blowing themselves up at Lehman. Bear Stearns, kind of the same stuff. Well, basically, they blew up because you look at this and you say they blew up because they were betting against trends. They were betting on something called mean reversion. Mean reversion is where basically you bet that a trend won't last. I don't know if you've ever done that in trading, when you don't take your stops, when you don't take, the message from the markets that a trend is in place and you fight it, you end up usually getting blasted, right? Follow the trends. They will be your best friends. That's why I named my company BigTrends.com. The Big Trends is where it's how I launched Big Trends, by the big internet names of the mid to late 90s and the brokerage stocks and so many more. And so the beauty of this is that, okay, so again, when you take advantage of the big trends, you can get that dramatic growth potential like I was showing you. And that's without me even compounding it. So when you go to that page, you'll see this special. It's not going to last for very long. We're going to keep it up there for to the end of the day tomorrow for just a little over 24 hours, maybe I guess you'd say about 35 hours or something. But basically, we can keep it up to the end of the day tomorrow for Fausto's group here. So you can take advantage of this, lock it down. You can use PayPal or whatever credit card you want. So you can go ahead and get it set up that way, and then you can start paying it off real quickly based on it just takes one of these good ones to have you say, boy, you got an incredible value for not a year but 2 years of access. For the usual 2 years access would be about $8,000. You're getting it with all the other bonuses here, the boot camp, the rule sheets, the weekly video training for just $997 one-time investment. Go to members.bigtrends.com, not www, but members.bigtrends.com to become a member /GSO24 of this service. I'm going to hand it back over to Fausto so he's got some time to kind of get set up and do what he needs to do for his presentation next. So hang around for that. I want to thank you, Fausto, for having me on. It's always a pleasure. I hope to see you and your wonderful family here soon. And as things return back to normal, I'm eager to start traveling. I hope to see you out at one of the shows real soon.
Price, thank you so much for being here, and it's always been a pleasure. I'm glad that you're able to stop by, and don't forget, I want those picks. You hit it big last year, and I screwed
You
up.
had your lucky number. You had authentic. You had the horse.
I know. So, and I know this is where we all come together, and it's just a great thing. But anyway, guys,
Absolutely.
make sure you take advantage of Price's promo here. He's been doing it for so long. And it's a great deal. You got nothing to lose but to learn something that's going to help you understand how to play. Those alerts are fabulous. But thanks a lot, Price. And like I said, I look forward to seeing you in one of the upcoming events again. We want to get this damn COVID out of the way. But for everyone, don't go anywhere. I'm gonna pick up in about. We're gonna play a quick little video of Cyber Trading University and what we do here and everything, and then I'm gonna pick up. So in the meantime, you guys could sit back and watch, register and purchase the promo that Price Headley put out there. And then I'll pick up and go from there. Right, guys? So don't go anywhere. Thanks again, Price. I'll see you soon and be safe.
You too. Take care, Fausto.
Hi, my name is Fausto Pugliese, president and founder of Cyber Trading University. Cyber Trading University, I started close to over 25 years ago. I started one of the first online schools in today's industry where we focus mainly on day trading. What makes us so different than other schools is that we're just not your typical school that's just going to teach you how to trade. We're going to go out there and be part of a family, be part of a team. We're looking for traders that we could trade together.
My name is Elaine Forney, and I'm actually living in North Kingstown, Rhode Island right now. Well, I'm actually retired, so what I do for a living is I'm a trader. That's what I'm doing now for a living.
My name is David, and I'm from Richmond, Virginia. I'm retired. Right now I was in aerospace with Boeing.
My name is Richard Serrano, and I'm from East Stroudsburg, Pennsylvania. I'm a network field engineer, and I do telecommunications.
My name is Phil Scheib, and I am from Alaska. I am retired locomotive engineer.
My name is Leanne Jack, and I grew up in Appleton, Wisconsin. So I'm a web designer and a front-end developer.
My name is George Brooks. I am originally from New Jersey. Been in IT for the last 33 years. And in between that, still cutting down trees, climbing trees, and all that other stuff in between.
My name is Terrell Lee. I'm from Mobile, Alabama. I work at a small used car lot just to get out of the house.
I discovered this whole community of traders in the trade room, which, you know, I was sitting in front of my computer at home all by myself, and now all of a sudden here is this community out there, which I found very generous. Everybody was so supportive and welcoming. It just really blew me away.
What makes us so different than other schools is that we're just not your typical school that's just going to teach you how to trade. We're going to go out there and be part of a family, be part of a team. We're looking for traders that we could trade together.
My name is Josh Levitin. I'm from Bethpage, New York, and I'm the senior instructor here at Cyber Trading University. What makes our on-site class so great, aside from the networking aspect of it all, just having our students meet each other for the first time, is the fact that myself and Fausto are very hands-on with our students in the sense of just being able to literally overlook their shoulder and watch their trade, what they're focused on from their platform.
Some news came out and the thing just popped.
While I can comment on what they should focus on online, they might not be able to understand that as well compared to having us right there in front of them.
I kind of like the idea of not being in front of a computer 8 hours a day, because I can't do that. So I kind of like the idea of doing it in the morning and then going to do all the other stuff I need to do.
Everyone that you thought was going to do that, you're going to have 9 losses versus 1 winner. Yeah, it's like it's not worth it.
When I spoke to Fausto on the phone and he interviewed me, the thing he said the hardest thing for me to do would be to unlearn the things that I previously learned, and it turns out that's 100% true. And the stuff that I'm learning from him and from Josh and everybody has really made all the difference in the world in understanding what a day trader is and how it actually works.
Fausto and the staff at CTU University, they're really on top of everything. They give you good trade choices, and they keep you alert onto whatever's happening in the market at the time for the day.
Right. So we made a profit. What did I just say earlier? Just take the money and run, because guess what? If you didn't take it, how would you be doing right now? Now you're losing money. You're just trying to make that day's pay. That's all you're looking to do. You got it. You made it. Listen, for every stock, if that kept on going, for everyone that you thought was going to do that, you're going to have 9 losses versus 1 winner.
I don't think you're going to find a better support team in the stock trading business anywhere. That's why I'm here at the platinum level.
You know, a lot of people want to go out there and trade and don't know if it's for them or not. And guess what? That's okay, because it's not. And the thing you have to look at is you have to find a mentor, you have to find a school, you have to sample a couple of things with a couple of schools out there, do a couple of classes, and you make the choice. But don't make the biggest mistake that people make. Go out there and be part of 90%, maybe even higher, of the failure rate in today's industry, because people want to try it before they learn. I mean, would you ever want someone to work on your loved ones that never went to med school? Or how about just giving your finance money to some financial planner that never learned finance? We are no different, but you are on the right path. The right path is you should be doing it on your own. And by doing it on your own, you need a mentor to show you how to do it. And that's what you're going to get here at Cyber Trading University. All right, everybody, welcome back. Hopefully everybody enjoyed that quick little video, and hopefully everybody liked what Price Headley had to talk about regarding about his option strategy. What I'm going to talk about is more of day trading. So just want to do really quick. Can we see, do we have any, I actually know, I'll even do a poll. How about that? That actually is always pretty cool. Just everybody let me know. I want to know what kind of traders we got today that are in the trading room. You see a little poll jumping up there. Do we have any stocks, option, futures, Forex, intraday traders? Want to get to know and see what kind of traders we have. Listen, what's nice about the market is you should try a little bit of everything. Like you heard, I was mentioned earlier in that video. And then sometimes you just find if it's for you or not. So you don't have to go crazy and have to make things work. You get it or you don't. You know what I mean? But don't be afraid that you tried something with somebody and you know you like it. Maybe just didn't find the right person. You know, there's a lot of people that teach a specific, let's say, math or English. You're like, oh, you know, I like that teacher better, explained it better. Same thing about trading. We could all do very, very well in trading, but we need to know how to play the game. Now, I'm going to share this poll with everyone here. It looks like we got a lot of very good stock traders and options. I'm personally a day trader, a stock trader. I don't know. I just like it because I'm free at the middle of the day. I only work an hour a day. And I'm going to show you some of the stocks that we traded. And you're just always in cash. I don't care what I trade. I just here to make money. I'll give you, and before we jump into everything, ladies and gentlemen, I'm going to talk about some of these things that we're going to be watching. I'm going to talk about how to follow the money. That's basically what we're going to do. And if you look at this example, did anyone that I have up on the screen, did anybody see the stock VXRT today? We traded the stock. It was a great runner, beautiful runner. It was phenomenal in the pre-market. If you were on my YouTube channel this morning at 9 a.m., I was actually in and I traded it. Got a little upset I sold a little too soon. But did anybody see the stock? Beautiful stock. It ran from like 860 and shot up, I don't know, up to 11 by 10 o'clock. Right at the open, it ran from 960 up to 11. Now, what I'm going to show you is what you're seeing right here is, do you notice that there was a big red line up here? What do you think that is? Oh, you don't know? There was about a 561,000 share seller. That's all. That's all. That's a lot of shares, don't you think? Wouldn't you like to know why the stock came down and when you should have got out and when's the maximum you can make? Because if you didn't know he was out there, guess what? Stock went from 11 all the way back down to 9. And you know what? If you were somebody who jumped in late and thought it was going to break out and go back to 20 like it did a long time ago, guess what? You're not looking too well. And if you were making money and you did buy it at 10 and you could have got at 11, you could have bought 1,000 shares, made $1,000, $250,000, and then and you got greedy because you have that, maybe you have a problem, don't know discipline or don't know when to get out. Maybe that would have been the self-answer. So that's what we're going to talk about. So let me go into it and have some fun. But these are a couple of things that I'm going to showing you. And also, when we're all said and done, when I'm done, I'm going to invite every single one of you here to see this live in the trading room and see not only me, but also see all the great, wonderful students we trained and see how they're doing. Because that's really how you know that you have somebody that could teach you how to successfully do it. You got to see the other traders, how they're doing. Okay. So basically what I'm going to talk about is how to become a successful day trader in 30 days. Why 30 days? Some people 30 days sounds pretty fast. No. Well, listen, you get it or you don't. You understand? How many of you guys or fellow traders actually have had a job and you worked with somebody, or maybe you're a business owner, you hired someone, you're like, damn, this guy is just not getting it. I mean, you're teaching him, trying to explain to me, just not getting it, and you don't want to keep paying somebody that just not going to get it. Trading is really not that hard. It's really not. You know what the hardest part about trading? The greed and the discipline. And that's what hopefully I'm going to teach you. But to figure it out, it's not really that complicated. But before we get started, guys, just really quick for compliance issues, for everybody, warning, the trading is it could be very dangerous. You really don't want to go out there and trade more than what you make. Here at Cyber Trading University, I'm just going to be very straightforward. It's illegal to tell you what to buy and sell unless you're registered, which we're not. We don't tell anybody what to buy and sell. We teach you how to figure it out on your own. I think that's more importantly what everybody really wants to know. But be very careful. Trading, does have its risks, and you can lose a lot of money in doing it. Now, what are we going to learn today? Okay, well, basically, I'm going to talk about what is day trading. We're going to talk about how to make a living as a day trader, why people fail in trading, how to find the stocks that we traded. If you've been watching us on our YouTube channel, or you're part of it, or maybe you just came from one of our affiliates or promoted to show up here, I'm going to talk about that. I'm also going to talk about what is level 3 and how do we use it, because that is the number one thing that we focus when it comes to trading. Now, just a little bit of information about Cyber Trading University, just to tell you a little about myself. I've been doing this for over 25 years. I love what I do, okay? But I'm also in the business to trade my traders. So what I'm here to do is I'm looking here to recruit some traders that are watching right now, you specifically, and I want to see if you will be a good fit for us, okay? Because I'm always teaching people how to trade, and eventually my students, they graduate and they end up opening their own schools. I mean, there's a lot of schools out there that are students of ours, and I'm very proud to say that. I'm glad to know that they're doing very well. But I'm always looking to recruit more traders. But please keep in mind, not all of you qualify, okay? Which is not a bad thing. It's not a bad thing. We just don't go out there and just invite anyone just to pay a subscription or stuff like that. We don't do that. We do something different, and you'll see. But most importantly, let's see if it's for you or not, and see if you get this first. That's the most important thing. Now we basically know what kind of trader everybody is. I think I shared that, right? So we know what kind of trader everybody is. Like I said, I like to day trade because I don't want this to happen. I don't want a stock owning it overnight and it goes from 10, it wakes up and it's at 4. That obviously doesn't go too well. And it's really kind of hard to dig yourself out of a hole. So day trading, just to be very clear, day traders are in and out the same day. That's what day trading means. So please don't confuse it and, as a swing trader, because I've done so many events and people are, oh, you're going to lose all your money. I tried to day trade. And I always ask people, how did you lose money? Oh, I had this stock at 10 and AMD and, and it went all the way down to 4. I'm like, really? I never heard that before. Stock dropped that much in one day. Oh, no, I had it for a couple of days. Then that's a swing trade. And what ends up happening, people like the concept of day trading, but then they don't know how to take a loss. And that day trade becomes an overnight, which becomes a swing trade, which becomes worse and then becomes an investment. And that's how they blow up their accounts. So we got to be very clear on how to day trade, because you don't want to get yourself involved into that. That's how you get yourself in trouble. But day traders, I know a lot of people like the concept, why we're all doing it. It's fun. It pays a lot of money. But day traders don't look on a percent on their money. We basically work on a salary. It's a day's pay. $500 a day is $100,000 a year salary. To make 50 cents a day on 1,000 shares, you got to make 50,000 little stinking cents. That's it. 50 cents. We see stocks move dollars. Hell, I just showed you VXRT. Let me show it to you again, right? You didn't have to trade that all day. You could have just bought it at 10 and sell it at 10.50. You didn't need 11. You know what I mean? So there's a lot of opportunities out there to make money. You don't have to make a lot of money to do that. That's the most important thing. So have you ever wondered, how does a stock like today, we traded a stock, MBIS, how does it go from $13.50 to $19 in one day? Can anybody tell me what made this stock go from $13.50 to $19? Can anyone answer that question? Let me see how you guys answer this. What made it go up? One word. It's only one word. Buyers. Demand. Okay? Alex Icebergs. We're going to talk about that next few moments. Buyers. Could everyone just put that in the chat room? I just want to make sure. Listen, we got over close to 200 people in here. And I'm only hearing from some of you guys. Don't focus on the screen. Don't focus on another chat room. Don't focus on a trade. Focus right here, because I take this very seriously. And if you really are not going to trade, please don't take it in the wrong way. If you can't answer this question, you're going to lose all your money. And you're not in that. You don't want to be in that business. It's a very, very important question. Demand. Buyers. Very good. I'm glad. Thanks, Bob. Thanks, Katie. Thanks, Raymond, Alex, Julia, Gene. Okay. Now, do you see buyers on a chart? No. The buyers, the chart is only showing you what happened in the past. What we want to know is what's going on in the future, right? The only way you'll be able to find out who's buying it and who's selling it is you got to know where to find them and who's running them up, okay? So you ever wonder, like, how can the stock run not even one day? This is 2 days. Okay, look at it. It ran all the way to $30. $30. I know some of you say you trade Forex. When's the last time we just had a new student. So I've been trading Forex forever. I never seen that happen. Doesn't happen in Forex market. Happens in the stock market every day. Every day. So you need to learn where to find the fish, right? Before you can reel them in. I teach that all the time. I love fishing. I love this photo. But the bottom line is, there's a lot of open ocean there. Where is the right spot? That's what it's all about. Where's the right spot so you can risk the least amount of money with the high amount of reward? Because you can't trade everything. So where do we find these stocks? Let me just tell you. I don't know if you guys are subscribed to my YouTube channel, but we'll post it up there. My Twitter, we post up our Twitter. CTU has already posted a Twitter link. Just click on it, like us, friend us, so you get our alerts. But the thing is, we teach you how to scan the market. And specifically, where we look isn't a big percentage gainers and losers. That's it. We don't really, there's no secret sauce out there. I don't have a crystal ball. I hate people that say that. Like, oh, you know what? I want you to get my alerts. Listen, they're right in front of you. Your platform offers it to you. Okay. But the thing is, how do you know which one on that list is going to give you the least amount of risk with the high amount of reward? You can't trade them all, right? How do you know you're not dealing with a penny stock? How do you know you're not dealing with something being manipulated? How do you know if you're not dealing with something that's a short squeeze, whatever it is? That's the easy part. The hard part is hitting the button and saying, you know what? I'm in. And what's even harder, not getting greedy and getting out. Finding them, though, it's right here, right in front of you. Now, what is cyber trading strategy? I think that's what everybody needs to know from every one of their instructors. Our strategy is this. We just follow the money. I just follow the money. Let me just get back to that stock I showed you. VRXT went from $8.60 all the way up to $11. Why did the stock go down at 11? Why didn't it go to 12? What made it stop and get all those orders done? Because right here, let me get my little pointer so you guys can follow along a little bit. Yeah, it usually helps. You see my little red dot? Right here, there's a 560,000 share seller. You know how much money that is? That's over what? Almost $6 million of stock, right? 6 million. No, it's more than that. I'm saying more than that. It was at 60 million, right? 500,000 times 11. Right. So that's a lot of zeros. Okay. So that's a lot more. I mean, like, think about it. How much smarter and better decisions, if you knew you were in a position that you knew that order was out there, you probably would have took it. You probably would have got out also. I mean, that's how the game is being played. So I'm going to talk about that. So let me show you how we do things. We need to know where the buyers and sellers are at all times. Now, everybody gets level 1 quotes. I don't know if you guys know what level 1 is. Basically, level 1 is the first level. It's just a bid and offer. You look up, I don't know, you put the financial station, a little ticker on the bottom. That's level 1. It's saying, okay, what's the stock trading at? Tell me any stock. I don't know, Facebook, any of them. I'll tell you the quote. It's worthless. You just know it's at that moment in time. Now, where comes the level 2? Everyone's like, oh, yeah, you got level 2. Yeah. Level 2 has been outdated since the 90s. I can't even believe they even still have it. It's a waste of your time, okay? Level 2 is a modified level 1, basically. That's what it is. It doesn't show you all the orders. Now, remember, I am looking at our strategies to teach you how to follow the orders. Now, level 3 is where we find the orders. And one of them I'm going to talk about specifically is called NASDAQ Total View, okay? You basically have a seat on the exchange. I don't know if you guys know that. You ever go to a car auction? Oh, it's only for car dealers. Well, guess what? Going to the exchange, you thought at that time, the only way you get access to it is you have to be a registered trader. It doesn't happen anymore. You can have it. You are now, thanks to traders like myself, us SOS bandits back in the old days, we made this possible for you. I was actually one of the beta testers for NASDAQ to build NASDAQ Total View, okay? But I'm going to show you how unbelievable popular it is and how you've been trading blind this whole time, and it's going to stop now. Now, before I do that, let me just do a quick poll, and I want to just get to know, do you have level 3 quotes or Total View? Just give me a yes or no, or you're not sure. Let's see how you guys answer this. All right, just waiting for the poll. And by the way, the ones that are watching this on Facebook or YouTube, if you register, you can always jump right in, but we're doing a quick poll through Zoom right now. All right, so I'm going to end the poll right here. So it looks like listen, if you didn't answer this question, I'm just going to take it as a no. Okay. So let me share it. So you could see that almost 80 to 90% of you don't have it. Now watch how what you're about to hear right now. I'm just telling you right now, it's going to be very disturbing. You're going to be like, first of all, you're going to be really ticked off that no one ever told you about it. If you spent money on education, and you're going to see like, this is so much easier. All right. So let's look at this. What you got right here, and you can see my little dot right here. You got on the left-hand side, these are the buyers and these are the sellers. So we're looking at a stock called FCell. Okay. And we're seeing every single buyer at every single price level at every penny, every order. And whoever wants to buy for the most amount of money is up on top. Whoever wants to sell their shares for the least amount of money is obviously on top also. And if you wanted to, I don't know, buy it for less money, you're all the way down at the bottom. So it's basically what you're looking at is a big chat room. That's what that is. You are seeing every single order out there that whoever is trading FCell is right now out there through this platform. Now, the first thing people look at this and be like, that's a hell of a lot of numbers. It looks distracting. It moves very fast. Okay. Yeah, Lou, actually, I was actually one of the, dark pools is also all in this. But by the way, dark pools is just a fraction of what you need to know about. Okay. That's probably like 5%. What I'm showing you here is all the high frequency trades, all the algorithms that make 70%. So as much as a dark pool might make 5%, I'd rather follow the 70% of it. Okay. Now, how do we use this data? Well, the thing is this, with all these numbers out there, you don't need to follow every single one of them. Actually, 95% of what you see here is worthless to you. You don't need to see it. This is what you do need to see. The big block orders. This guy like right here at PLTR with 21 orders out there, meaning there's 21 different people out there, 58,000 shares at $24. And when you look at the stock and you see, wow, look, the stock went from 28 all the way down. And finally it stops right at 24.50, right there. Why did it stop? Because there was a big buyer out there. Now, do I care of the 100 share buyer? I mean, listen, it's 100 shares, 100. I don't know how many shares you trade, but it's 100, it's 100. No matter who you are or where you are going to be on here. So every single order you place is out here. Okay. But the big thing is this. It's not the 100 share orders that make support levels. It's this 58,000 share buyer that makes that support level. So hopefully this is making a little bit more sense, because the bid equals support. See, here at Cyber Trade University, we don't teach you support and resistance levels. Support and resistance levels are worthless unless you got the buyer and seller out there to confirm it, because supports and resistance levels get broken all the time. You know that. I know that. Everybody knows that. But why? Why do they get broken? Who is breaking it? How is that even possible? The Fibonacci didn't tell me that. The 200 moving average didn't tell me that. But the orders will tell you that. Now, how about going up? Look at this stock, Workhorse. Stock goes from 1850 at 9:30, rockets in 2 hours, goes to $24. Wow, that's a nice little profit right there, right? But why did it go down? How do we not know to get out at 24? You might say, you know what? I'm getting out at 25. I'm out at 25. And then you're like, oh my God, it dropped down to 20. What? Why did I sell at 24? Who was there at 24? Well, if you looked at the level, at the level 3, you'll notice there's 54,000 shares out there at 24. I don't know about you, but if there's anybody on that list that I'm really concerned about making a resistance level, is that big seller on the ask for 54,000 shares. By the way, did I lose anybody yet? Is anyone confused? Just give me a yes or no. Anyone lost? Raymond, you got it. Julia, you got it. Very clear out. I like that one. Very good. I'm glad. No, all good, Bob. Okay, you got it. Good, good. All right. Valerie, I like that one. That's pretty good. Maybe we'll copy and paste that. Valerie just put us something pretty cool. That's nice. I like that one. I'm going to copy and paste it. So basically, bid equals support equals demand. Ask equals resistance, which means supply. Very good. So let's have a little fun here. Okay, let's do a little test. And listen, really quick. This shouldn't be a difficult question to ask. Is this stock going up or down? Looking at the stock, just really quick. Could everyone just go into the poll and just tell me? All right. So as you guys are filling this out, if it's not coming right to you and you got to think about it, you maybe want to maybe a question mark out there. But the thing is this, it's going down. And I'm going to share this poll because I want you to see the people out there. Now, if you really meant that this stock was going up, I just hate to tell you this, you're wrong. You should not be trading. So for everyone out there that voted, okay, and the ones that voted thought this was going to go up, I don't know why you thought it was going up. Maybe you hit the wrong button. I don't know. But if you really thought that this was going up, I recommend you should quit trading right now. I don't understand why anybody would think this stock is going higher. You're probably overthinking it. Maybe you're like, it's going to go up. There's a trick question. I didn't ask that. I was asking you a very simple question. Now, for the ones that said it was going to go, that's going down, you just passed kindergarten in trading, okay? I know it was a dumb question, but that dumb question leads to a very profitable trade. Now, what do we need for the stock to go up? Yeah, Glenn. By the way, there's more. Right, Glenn? I like that one. It's good to see you, Glenn. It's always a pleasure. You need buyers. Oh, my God. We need buyers. Holy crap. Who would ever thought, right? Now, everybody teaches charts, right? Do you see buyers on a chart? I'm just curious. You guys see any buyers out there? I don't see any buyers, right? What the hell are buyers? So how are we going to know it's going to go up? Oh, but it's got the support level. Listen, let me change the slide here. We got a 102,000 share buyer. There's 259 different orders around the entire world of people out there that want to buy FCell at $9. Let's think about this for a second. What do you think is going to happen when we get down to $9? What do you think is going to happen? What does that even mean? I don't care what it means. All I know, that is a demand. That is a lot of buyers. And there's a lot of people out there that want to buy it. Do you really think I'm going to listen to some jerk on TV or some indicator? I'm on that guy's team. You could sit there and you can analyze all you want, but without looking at any tools or anything out there, that is a demand. And you know what? If you weren't prepared for it, look what ended up happening. It hit 9 and shot right up to 10 less than 30 minutes later. If you knew with those buyers and you bought it at 9 right there and you sold it 30 minutes later, you sold it at 10. Hell, if you sold it even at $9.50 for crying out loud, what did that cost you? $9,000. You made yourself 50 cents, $500, $100,000 salary. Who doesn't want that job? Right? In 30 minutes. I don't know too many people that make that other than lawyers and doctors. I know the people too. But that's a lot of money right there. That's why people love trading. I don't know what that means, Tony. I mean, but they're bluffing. Listen, if you think that's a bluff, you're going to get into my trading room. I'm going to show you how to sign up at the end. And I'm going to find a 102,000 share order out there. And we're going to use your money. And you tell me, and I will make you a bet. I will bet you $1,000 that if that guy's bluffing, I will pay you $1,000. But if you're wrong, you got to pay me $10. Okay? Sound like a deal? I mean, that sounds like a no-brainer. $1,000 bet. You could win right now. Fine, I'll find an order like that, and you tell me how fake that is. Okay? All right. So, so sit and wait. For everybody, without looking at anything out there, any bells and whistles, let's just go right to the source. Let's go right to the orders. Where do you think resistance level is in space, SPCE? Where do you guys think? Let's see you guys take this answer. All right. So as everyone's answering this question, remember, what is resistance? Resistance are sellers. Where the sellers, they're on the right. And as we look on the right, we could see we got a 43,000 share seller right at 24.75. So in theory, if I was to trade the stock and I was long, that is a price that I probably would want to get out. And if I was not in it long, and I might even consider shorting the stock, that obviously is a number I would be focused on shorting it at. Now, when we look at the chart, I don't know about you, but this chart looks beautiful. It looks like it's going higher. Now, some of you like saying, "Oh, it's a double top. I see triple bottoms. I got 7 green candles, and that usually means with the wick." And listen, at the end of the day, did you need a chart to tell you that? Because from 10:30 all the way up to about 2:30, it finally came down to 23. If you just followed the money and knew what that guy was doing, you should have got out, or you could have went short and could have been looking pretty damn good right now. That's the power of level 3. Okay. That's the power of just following the money. Remember, we all have favorite stocks we want to watch. And sometimes it's nothing wrong with that, but sometimes they don't move. You're not here to sit there and watch. You're here to make money. You need to know where these orders are. You need to know where to get in and where to get out. Because if you don't, you're going to blow up your account. And that could happen. All right. Let's talk about something that I just showed you is called level 4. Okay. Look what happened to this stock right here. Here's a stock that I'm going to show you this when we get into the trading room. But here's a stock that went from $16 and it went all the way down. And there was this guy since 10 o'clock in the morning. We're already almost at 11. It's coming up to a 229,000 share buyer. Now, what do you think is going to happen when we get right now at $15? Is the stock going to go up or go down? It's going to reverse. It's going to go up. Here you are. You're seeing a stock going down, 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 down. And then sure enough, you're like, wow, it's come. There's a big order. It should go up. Now, do you see this little ball right there? Red means selling. Green means buying. It's a lot of red. You see that order of 15? What happened to that 200,000 share buyer? Oh, he got executed. That's what happened. What happens if a big block order gets hit? What do you think is going to happen? Is the stock going to go up or go down? It's going to tank, right? It's going to go down. And guess what? Not only did it go down at 15, but another buyer came out there at $14.50, took him out, dropped down to almost $14, went all the way down to $12. Okay? All the way down to $12. So this is what we call level 4. Okay. And I'm going to show you how this works. So, and what's cool about level 4, this aggregates not just to NASDAQ, because right before on NASDAQ, the book, we're only looking at one book. There are other exchanges. There's a New York Stock Exchange. There's EDGX. There's BATS. There's other exchanges out there you could trade on, So what's nice about this one, it's bringing all those exchanges, because you may have not seen that order, that 200,000 share buyer on NASDAQ. He probably was on the New York Stock Exchange. Who knows? So here's another great tool. And this is back in the day when I used to trade. This used to be called like the Instinet machine. Okay. And back then I had to pay $2,000 a month for this stuff. That was like $1,000 a month I had paid for it. Now, for some of you, if I said, hey, would you pay $1,000 a month for this? And imagine being a 22-year-old. A lot of people like, wow, you know what? Sounds like a lot of money. You know, it's like 3,000-4,000 in today's times. But the question is, hey, you want to make $250,000 a year? Like, yeah. So you pay $12,000 to make $250,000. Why wouldn't you not do that? You know? So to make money, everybody, you got to spend money. Nothing's free in this world. Okay. And does it cost $1,000? No. You know what it costs? $15 a month. $15. Is that, and you're not buying it from some BS website. You're buying it right from the exchange. You think they need your $15? Come on. But data costs money. You know, they got to charge something. That's how these exchanges make money. That's really cheap. Okay. But the question is, I don't want you guys to buy anything. I need to show you live in the market, because you probably would do more damage to you by just, you learn just enough to be dangerous. So anyway, welcome to the art of day trading. That's what day trading is. That's how we get in and get out of positions. So you could trade with the level, with total view, or without it. You look at that right-hand picture over there and you see all those traders, you see that trader wearing that really nice glasses, you know, if you look at those screens behind them, there's no charts. They're numbers. Those are the best traders, the best. That's what I used to do. I was down there. You know, I mean, those are the people that you want to use what they use. I'm telling you, that's what I'm teaching you. I'm teaching you how to use it. And you got to remember too, everybody, there are hundreds of thousands of people trading. You know how many people just still ignorant and like, yeah, you know what? I like doing what I'm doing. You do it right or don't do it at all. There's a whole reason why you hear, politicians going after Wall Street. Oh, we got to tax those people. Of course, everybody's like, oh, the bad traders. Of course, because we make so much money. Listen, I can't, be angry at someone to be jealous of me, that what I do. People are like, what do you do all day? They see you running your house. I see you got your own, cooking station, and I have a home living, and you're like, even people outside, they're like, what do you do all day? Like, I'm a trader. They're like, wow, really? You make money doing that? They're like, I tried, I couldn't. They're like, well, who taught you? Does that really matter? Like, I don't know. Last time I went to the doctor, I hope that he got an education at a school, learned how to do it. Just didn't pick someone out of the hat. You're no different. You got to see who's trading you. That's how you got to make money in trading. So when I buy a stock, where does my order go? Now, I'm an actually tape reader, and that's what I kind of teach my traders. So for one of you that mentioned earlier and saw that big order, and I agree with you, how do you know that order got executed? How do you know the guy he canceled his order? Well, time and sales is the great little window right there that's going to tell us that. And we have them segregated in two colors: green if trades go off on the offer, red if they go on the bid. Simple as that. You see a lot of greens, stocks going up. See a lot of red, stocks going down. It's like red light, green light. So anyway, let's look at this example right here. Here, yes, this is actually comes directly, John, from the exchange. Okay, every execution system has that. But look at this LZ trade. See, they had a big iceberg order right there at 1450, 120,000 shares, right? Well, you notice right here how the stock went from like that 12 and it shot right to this 1450, right? And you see how it hit it, it came back down. It hit it, it came back down. It broke it. It didn't break it because it was a triple top, okay, or whatever you want to call it, double bottom. It broke it because the guy at 1450 got executed. Look at all the green orders: 1,000, 1,000, 1,000, 2,000, 3,000, 2,600, 1,000, 5,000, 5,000, 5,500, 7,200. The guy got executed. Why would anybody want to buy a stock that's going down, right? No, they're the ones that ran it up. And guess what? It ran from 1450 and it was shot. You can see it went all the way to $16. So when you're trying to figure it out, what made the stock go up? It was because of these orders. It's as simple as that. So what happens to the big support levels if it breaks? This is the opposite. Big buyer right here on the bid, 100,000 shares. Stock came right down, hit it, hit it, hit it, hit it, hit it. for about 30 minutes. Eventually, the guy bought all those shares, and there was no one left. There was no more 100,000 share buyers down here. Look at the red, 10,000, 3,000, 3,000. Are you going to second guess these sellers? You could sit there and you could hope all you want. If you're in a hope mode, you got some big issues. That's a bad place to be in. Follow the money. And that's what we teach you at CyberTrade University. Don't listen. I say it all the time. I tell people, don't get insulted about it, but we're like the ants on the floor. We just want the crumbs. These guys are moving 100,000 share lots. You're going to question them? So what I teach my traders is this. If you can't beat them, you just join them. That's all. Just join them. Think how much smarter and better trading decisions if you were able to go out there and follow these orders. Lou has a question. So these big orders here is stop sell orders? No, these are limit orders. These are limit orders. These are people. Listen, you put an order out there, it's going to show up. It's going to show up. You actually can see your orders. When you get in my trading room, you'll see it. We'll do trades. You'll see our orders out there being posted. Even yours, but that's the issue. You can't just go out there and think you could do this without having the right tools. It's as simple as that, especially day trading. And you know what? You don't need a lot of money to make this a successful career. I mean, we'll look at Mavis right here. The thing ran from $13.50 to $19. Great traders don't buy at the bottom and sell top. We buy in between. I would like to make 6 points on the stock, but I don't need 6 points. If I buy 1,000 shares, I make 50 cents. If some of you will be ecstatic to make $250,000 a year, $1, not even 6. You got $1, because that's what we usually teach our traders how to make. $1, $1,000, $250,000. Who doesn't want that job? Pays a hell of a lot more than Social Security, I'll tell you that. So you got to understand something. You have to learn before you could earn. Okay. This is a photo of me doing an event with Charles Schwab. Charles Schwab got a great platform too. I mean, some of them have good platforms and some of them won't tell you about them, because you got to understand the way these brokerage firms make money is by you trading. That's why they're giving you free tickets. Do you realize that they're trading against you? They're like the biggest casino in the world. They are the biggest casino in the world. Think about it. They want you to lose. That's why they give you free tickets. Like, you ever thought of how do they make money? Like, they'll let me trade because they know majority of people lose money. Okay. Now, for me, when with the certain platforms, they're going to say, oh, okay. Well, in that case, you got to pay $3 a ticket. You got to do X amount of trades and so on. But they do like educated traders because they know you'll be a client theirs forever. So it's like it's like a double-edged sword. Do they make money on your losers, or they like to keep you forever? Don't go out of business. So that's basically why I do education for some of the top brokerage firms in the industry. Companies like Tastyworks, Ninja, Thinkorswim, TradeStation, Schwab, eSingle, all these. CTU has been endorsed by more brokerage firms than any school in the industry. And believe me, we really look forward to keeping that relationship because they watch our traders, they see what we do, and they want you to be educated. And that's half the battle. So anyway, this is what I want to do before we bring in our next presenter. I want all of you guys to come join my trading room, okay? And I want you not to judge us on our winners. I want you to judge us on our losers. And I want you to see how few and how we control them, because I think that's everybody's issue. Winners take care of themselves. It's the losers that a lot of people have a problem with. Watch what we trade, see what we're doing. But more importantly, don't watch me, okay? Listen to the students out there and the traders and see if they're making money. Because, listen, Tiger Woods is a great golfer, but you could be a horrible coach. You understand? I mean, anyone here follow sports? I mean, you have a great, I had a bunch of coaches at my house just the other day. They coach NBA players. So like, why is an NBA player need a coach? A private coach. They always need to be coached. And that's what you need. You need to be coached. No matter how good you are, you always need somebody out there that can make you better. And if you're not that person and you're losing, then you really need that support. So let's take that opportunity to get to see what it's all about. So this is our agenda, the weekly schedule. We actually open up the room at 7:30 in the morning. Okay. Actually 7:30, 7:45. And we start doing our trades right because you get like a couple of big moves. You get a move at 8 o'clock, 8:30, 9 a.m. We do a live broadcast. If some of you watching YouTube, you've probably seen this live all the time. But the trading room, we do a live audio broadcast, and then we do it, and we start from 9:30 to 10:30, and we're usually done for the day. We're actually done. Okay. And then you got free time in the middle of the day. We have a couple of workshops that we give you. And then we come back in the afternoon, do another event at 2:30, and then we trade the last hour of the close. Listen, if you made your money this morning, you don't got to trade the afternoon. Like me, I made my money this morning. I don't have to trade anymore. That's the beauty about this. Now, how do you guys get registered? $9. That's it. $9 for 7 wonderful days in our trading room. And this is what you're going to get for this. You're going to get access to the trading room, 3 daily market meetings, your own a morning and afternoon watch list, your own personal education advisor, okay, a weekly Q&A session, hundreds of hours of recordings, okay, for $9. Now, some of you think like, why is this so cheap? Listen, the $9 is just an application fee for us to know that we know who you are. Okay. I don't know who you are, know where you came from or anything, but the $9 kind of lets us know if you say who you are. Okay. We get a lot of, people that try to come and steal our ideas and whatever. So that's all it basically is. So if you're serious about it and you want to learn level 4 and you want to see if this stuff really does work in the real market conditions, what do you got to lose? And this is what I'm going to do as a bonus. If the first 20 people that register right now, I will actually even give you a coaching class myself. I'll even talk to you on the phone. Why? I'll tell you why. Because people are like, that sounds like kind of weird. All right. No, I'm looking for traders I could teach how to trade. Okay. If you really don't qualify, I'm going to tell you point blank, you might not be a good fit. This might not be for you. You might think it's for you, but wouldn't you like to, before you get surgery, talk to the doctor? Just because you assumed everything you read that you need the surgery, and the doctor who told you need surgery? The other guy. Yeah, well, maybe the other guy just wants to make money from you. But I'm telling you this, I wouldn't want to put that liability because that guy's going to probably go to jail or something like that, get in trouble, because you're going to probably do more damage to you than good. So why not hear someone tell you the facts before you actually put some real money on the line? Okay. So once again, $9. And then you know what? After a week, you don't think it's for you? I'll give you money back. Listen, I don't need the $9 I tell you. If I did, believe me, I would not be here. I need people that want to make, 6 figures. Okay. But it all is going to start right here. Now, a couple of questions before we bring our next presenter. Does anyone have any questions whatsoever? Any questions? How's it determined in advance whether in big sell orders to get filled, a price continues higher versus big sell orders driven the price down? Well, the time and sales window, Dean, and you're going to see that in the trading room. So when we see those orders out there, because I need people that can help me find these stocks with these big orders. There's no software out there that does that. That's really what this is all about. We're all out there trying to trade together. But you see those orders, you watch the time and sales. If they get executed, obviously stock's going up. If he doesn't get executed, stock's going to go down. Just like what we saw right here on the level 4. You saw the big order. The guy didn't get executed. It went from 11. It dropped all the way back down to 9. Remember, and he's still out there. 570,000 shares. Awesome. And by the way, I'm just going to bring this. You can't see it on this one. Can you see on this one? No, you can't see on this one. This is actually live. This is NASDAQ. Is he out there on this one? No. See, I can only go down. Oh, there he is right there. There's that 100,000 share seller. It's 180 shares out there at 1050. That's this guy right here. See him right there? But there's 140,000 because this one's aggregating more ECN orders out there. So anyway, let's see. We got a couple more questions coming in here. What is the starting date for the 7 days? So I would probably recommend you start on Monday. What you need to do is you got to talk to education advisor. He's going to do a little walkthrough. We don't want you going into the room and be like, okay, what's going on? You know what I mean? So we take it very seriously. We've got very good customer service. We're going to walk you through it. And you let us know if you want a specific date, you want to start it, you're more than happy to. Okay. But you got to register now. And then when you get registered, then we'll schedule from there. Okay. It looks like C2 is basically answering all of you guys out there. Great. That's fine, Bob. Listen. So anyway, I want to give you guys a couple of minutes to register. All right. And, what we'll do really quick, maybe we got about 9 minutes. I think we could probably play I don't think we can play the video again, but let me give you guys a little bit of a break. And then we're going to bring our next presenter in. We're going to bring Sean in, and Sean's going to talk about, about his style of trading, and then also give you a couple of some time to register. So, but anyway, guys, thanks for sticking around for the Cyber Expo, but don't go anywhere. We're not done yet. We got one more presenter. I know it's a long day, but you got to learn before you earn. What else we got to do? Marketing ain't going to move till the close anyway, so don't worry about it. All right. So we'll be back. And so do what you got to do. Register, maybe hit the restrooms, fill up your coffee, whatever it is. And then we'll bring the next speaker in. So thanks, everyone. Don't go anywhere. All right, traders, let's get ready to start. Let me bring our next presenter in from Nero Street Trading Academy. So first of all, I hope everyone's been having a good time so far. A lot of great content. Like I told you, there's no safer place than being at a cyber trading expo right now, because listen, who wants to go back to work, right? Everybody wants to trade, but you got to learn before you could earn. And that's why we host these great events at these cyber trading expos. And once again, there's only so many hours in a day I think everyone wants to spend listen to a bunch of presenters, but you could see the value there. So let me bring in Sean really quick. And let me tell you a little bit about him. I know Sean for a very, very long time. We do a lot of events with Nero Street Trading, and he's going to talk about how to scale the smart trading account, a small trading account using stocks and options. Now, he's a day trader like me also. He does day trading and swing trading. He's the founder of the company, and he's going to basically teach you his strategy and what works great. So let's all give him a round of applause. And Sean, the stage is all yours.
Hey, thanks a lot, guys. Appreciate the introduction. I'm just going to share my screen here, and you guys can let me know if you can see it okay. And can you guys do me a favor and just type a Y in the chat box so you guys can hear my voice and see the screen? That way we've got a good connection. Fantastic. Excellent. Excellent. Perfect. Well, I want to thank everybody for being here, and your attendance is always valued. As you know, there was just mentioned, you know, when you sit through these presentations, the key here is to make sure that you can learn something, but you can also find the solution to what you're trying to accomplish. As you know, trading is a business of risk management, and the problem is people lose a lot of money when done incorrectly. And once you get through that process, it can actually be quite life altering. And so what we're going to do is we're going to cut right to the chase. It doesn't matter if you have a small account or a large account, you're interested in being a consistently profitable trader. And I'd like to think that that's everybody's goal in here, regardless of where you come from or how much experience you have. Now, this event is going to be on stocks and options because that's the focus for today's topics. Nero Street is an academy, so we run multiple trading rooms, futures and Forex rooms. We've got swing trading programs. We've got day trading programs. But we're kind of like the Netflix of trading schools, so to speak. And for those of you, can you guys tell me, are you primarily stocks? Can you guys give me a yes if you're primarily a stock trader? If you trade other asset classes, just type in yes or no, or just type in what you're trading. If you trade futures Forex, type in futures Forex. I want to kind of get a feel for who you are and what you do and you know what your primary focus is. Because that's what we're going to do today. Is I'm going to talk to you about how we trade the stocks and options markets, and if you're interested in futures and Forex, well, we can definitely help you out in another event. That being said, I do need to cover a quick disclaimer because I am going to be showing you real trades, real fills, and we're going to be talking about you know, system performance. We're going to be talking about results. And, you know, in order for me to do that, I can't guarantee anything in this industry. This is a business of risk management. But what I can assure you is that we will teach you what we do and how we do it. If you do take trades, it is at your own discretion. Okay. So I'm going to get right into the highlights really quickly because I'm really about getting right to the brass tacks of things. You know, as the other presenters have mentioned, we've done a lot of events together. And the reason why we work together so well is because we're all of the same like-minded interest. We're all about results. And really, that's why you're here. In order to give you results and get you to where you want to be, there has to be a defined moment between you deciding, are you interested in trading or are you actually going to get good at trading? And I think that's the big defining factor between a trader's journey. A lot of people are skeptics. I don't blame you. It's a pretty hardcore industry. A lot of noise, a lot of stuff that ain't happening, a lot of stuff that's just a bunch of pipe dreams and smoke and mirrors, and there's no time for that. So I want to give you a reason as to why you should actually listen to what I'm about to share with you and why it actually has merit. We're going to talk about the layouts that we trade with. We're going to go over some live trades. We're going to talk about some of the reviews we've got with a lot of traders. And we're going to talk about how you can get involved with it, right? We're going to get in touch with it, and we're going to talk about that, right? So let's get right into this and just kind of introduce myself. My name is Sean Kozak, founder of NSTA, and I have a motto and I live by it and I die by it. I'm not here to give you any fluff or snake oil or false hopes. If you're going to be a good trader, you need to come in and learn what we do. You need to understand the tools that we're using, and you need to get good in a sim account before you scale to a live account. Any profitable trader that I've ever met that's lasted the test of time follows that framework. How many of you guys can commit to learning a strategy, learning the indicators, and giving yourself a little bit of time in a sim account before you scale real money? Give me a yes if that makes sense to you. I just want to make sure we're on the same wavelength here. Okay. Now I have an open door policy. You want to speak to me or you want to speak to any of our traders, you just shoot me an email and we'll get in touch with you, because we have an open door. We're not here to hide behind anything, right? Now this is proven to work. So my objective here today is not to convince you that I have a winning system. I don't need to convince anybody. We trade it very profitably. We've got a large amount of traders that do very, very well. So it's not really about me trying to impress you. It's about me demonstrating what we do, right? When you get to a level of skill and proficiency and you know what you do works, it's not really about trying to sell people on it. It's about just actually showing you how easy it is to do it. And that's exactly what we're going to do today. Okay, I'm going to show how quick and simple it is for you to understand what we're doing so that you guys can make sense of it. Now, I need to kind of talk about something that maybe some of you guys are going to like and maybe some of you guys aren't, but that's the best part about the way I present is I'm not here to make a bunch of friends. I'm here to make a lot of profitable traders. Okay, are you guys okay with that? What I'm going to do here is I'm going to just kind of pop the balloon, so to speak. Tell me why you got into the business. Is it time freedom? Like, I don't know why you're here. Like, are you here to change your lifestyle? Is it to spend more time with family? You know, what is it about trading that got you into the business? You know, you guys need to tell me this. And if you could do me a favor and just type the chat box, I'd really like to know where you're at. Are you looking to leave your job? Are you, looking to scale a wealth bucket account? Are you looking for daily income? Is it, you trying to, break free of the 9 to 5? Like, what is it that got you out of bed in the morning? And this type of stuff. I'm asking you this because it's a very, very, very important question, and most people don't spend any time thinking about. And that's the reason why a lot of people never get to where they want to be in this industry. Okay. So I got a couple of people here saying that the challenge is to be profitable, extra income, make a little bit, right? Replace the income. Okay. So I'm liking the answers today. You'd be surprised that a lot of people give me, they want to spend more time with their family and they want to travel and they want to work from home. All of that is garbage. I'm here to tell you that Wall Street doesn't care about that. Do you really think that Citibank or JP Morgan or any of them gives a crap about your family? They don't care whether you live in a trailer park or you live in a yacht. They're there to make money. The Wall Street industry is hardcore, and I'm here to pull the layers off the onion. Your only focus as a trader needs to be, and only should be, one thing. And I'm going to circle this so that you get right on the same page here. It needs to be about this. Okay, I'm going to put a couple arrows in here because a lot of people are all over the map when it comes down to this discussion, and we're going to break through it. You did not get into this business to spend more time with your family. You did not get in this business to spend more time with your friends and have a secondary income and maybe get a little bit of a hobby. All that stuff's not going to cut it. Wall Street is about basically making money, and if you get really good at it, you can then have all those extra privileges. That's just it. If you're not good at making money, you're not going to have the privilege. You're not going to have that opportunity to make those choices. So where a lot of people get stuck here is they do not focus on the primary goal, the reason behind the purpose. You need to be really, really, really focused on getting good at making money in this business. How many of you guys are ready to make money consistently in this business? Can you guys give me a yes? I just need to know if you guys can shift the paradigms here, because at the end of the day, that's all that you're really here to do. Okay? I'm a brass tacks kind of guy. None of this fluff. Let's get down to the basics. Let's get down to the reason why we all got here in the first place. Okay? So this is where everybody's skepticism comes in. Oh, wow, Sean, I've heard that smoke show before. Well, let me kind of put things into perspective. Your mind is going to start automatically saying, how can I be sure I can trust what you're doing, Sean? How can I be sure I can make money in your trading rooms? I've been into 20 of them before. How do I know that I can do it? I've been struggling. How are you sure I can actually trust this stuff? And is it actually going to be? That's the problem. Here's the problem. Nobody believes it's possible because they haven't succeeded at a high level yet. The reason traders don't get to where they need to be is because they've got this wall of negativity up that they do not believe that it's even possible to be very successful in this industry because they haven't reached that level of success yet. Well, I'm here to kind of shift the gears a little bit to tell you that we've got a lot of traders that crush the market every single day. And we post all of our trades and we show the trades and we trade it live and you see it in front of your screen because we have a model and it's very, very important. When you can see somebody do it in front of you, you cannot deny the truth. Seeing is believing. Okay, so when we trade live. You will watch us trade. You cannot get away from that. If you come into our classrooms, you're going to see us trade live in front of you. None of this, hey, did you see that fill? Or hey, did you catch that trade? Or did you know, I got in, did you get in? None of that garbage. That's not how you learn anything. When you get hired as an electrician and you're in a co-op and you leave college, your job is to get on the job and learn how to do the job. You don't go on the job and then your manager just leaves to go for lunch and says, hey, did you see me do that? And he's like, no, I didn't see you, right? Like, that's not how the world works. But in trading, that's how everybody works because 9 times out of 10, nobody knows what they're doing. And they're selling things out of context because they're not qualified to do so. So here's what I'm going to do. I'm not going to do that. I'm going to tell you that if you want to learn what we're doing, you're going to come in and you're going to watch professionals trade in front of you. How many of you guys would like to see that? How many of you guys are ready for something like that where we can trade in front of you and you guys can learn how to do it through visualization and actually watching someone do it properly? Because that's what everybody really needs here. It's not to be told what to do, it's to be shown what to do. The big difference. Listening is one thing, seeing is another. And you cannot deny that. So, my job here is to give you a reason as to why you'd want to even listen to how we trade. The stock market is not futures. It is not Forex or is not cryptocurrency. One big advantage over the equities markets that give you a huge edge over these other industries is sectors. And I'm here to tell you that we do trade several strategies. We have small cap strategies and we have swing trade strategies and we've got other strategies. But I'm here to tell you something that is really, really important moving forward. As an equities trader, and I'll just kind of give you a little bit of a background really quickly. I didn't come into this industry just as a trader. I came into this industry as an architect of software. So I look at trading from more of a mathematical perspective and also more of an experience level that is not from just a trader trying to make money, but actually from a trading developer that actually builds systems and problems. So one of the things I've learned over the years is that, you know, there's a lot of things that traders think is the answer, like order flow and all of these other tools and these indicators, but there's a lot more going on the fundamentals that will override that. So in futures and Forex and cryptocurrencies, they're very technically weighted because there's no big brother. There's no big brother controlling the market, right? You've got you've got your basket of main watch lists and so to speak. But in the equities market, there's like 8,000 stocks. And inside of those 8,000 stocks, those stocks are grouped into sectors and indexes that are basically going to dictate the flow of capital each day. And what happens is the banks, the prop shops, and the who's who is going to tell you what's going on real quickly if you understand what to look for. And the reason this is important is because every single day, whether you're a day trader or a swing trader with us, what we do is we let the banks show us where the money flow is today. You're not having to come in and be the master stock picker. There's nobody in this industry that's going to be really good at that long term. You can't build a business on something that happens once in a while. If you think about it, any business owner that is very successful has a model that repeats daily. If you do something on a Monday and it can't be repeated on a Tuesday and a Wednesday and a Thursday and a Friday, how the heck can someone expect to run a career as a trader? Doesn't make sense. Can't do it. So you get good at making money maybe one day of the week using some hotshot indicator and you feel like $1 million, and then what ends up happening is it never ends up becoming a long-lasting experience. I'm here to tell you that sector rotation started at the very existence of Wall Street, and it's been here ever since it happened. Why? Because companies make up industries, industries make up the market is made up of multiple industries that move money from one sector to another. And depending on if you're a day trader or a swing trader, you can leverage this to your advantage, because I'm here to share with you that there's 3 scenarios that make up a market. There's Big Brother, which is the spiders, okay, 50%. Not the Qs, not the Russell, nothing. It's the SPY, it's the S&P, it's the benchmark to all institutional funds. The reason for that is because in the mandate to big funds and debt markets and all these big pension funds, they have it in their prospectus that they need to compare themselves around the S&P. So the S&P is the big brother, okay? Then you have the sector, which makes up 40% of the market movement. And then you have the stock, which makes up 10%. And here's the problem. So many people are trading stocks and they're relying on 10% of the market to help them fundamentally, when really what you need to be doing is understanding the 90%. And what we do is we stack fundamentals on our side first, using 90% probability assessments, so that when we trade, we have a huge advantage on the asset that we're trading. I'm all about trying to stack the deck in my favor, because Wall Street's already stacked against us. You cannot control a market. You can only control how you participate. So if you can't control the market, what can you control? You can control how you participate in it. So inside of what we do, there's 11 sectors. Now, you can't trade an index, because an index is not a market that can be traded on the exchange. But what the sectors have done, and there's sector ETFs, there's a company called Sector Spiders, and Sector Spiders is a website. You can go to it. The website link is there. You can Google Sector Spiders. They make up 11 sector ETFs to track the indexes so that you could actually trade an ETF rather than the index. Now, what we're doing is we're saying, okay, we're going to rely on 50% Big Brother, okay? And now what we're saying is we're going to rely on 40% sector. So instead of us even trading the 10% stock, we don't even touch it. What we're doing is we have a market bias, long or short. And then what we do is we go into these ETFs and we look for the top 2 or the bottom 2 markets that are strongest and weakest of all these sectors. Because if the market is strong, I want to trade along the strongest sectors. Now I've increased my probability by 90%. Everyone's like, oh, I want to trade pullbacks. Oh, I want to trade breakouts. If you trade a pullback on one of these top 2 markets in a strong bullish market, it's going up, guys. That's just the way it's going to happen. Like, it's just, the market's going to pull you up, the sector's going to pull you up, and you don't even need to pick a stock. If the market's going down and the sectors are going down, you pick the 2 weakest markets, market's going to pull back, you're going down with it. Like, that's just the way the market, you're not going to fight the market's going to pull it, and the sector is going to pull it, and you don't even need to worry about stocks. Now, depending on how much money you're trading with, not everybody's capitalized to trade every market. So what we do is we will either trade the sector ETF, or we will go inside of those sectors and we will pick the stock inside that sector, because some people like trade small caps. Well, if I know that the market is bullish today, and I know that XLY is the strongest sector, I can either trade XLY and limit my risk without even going into the stock, or I can trade the stock and trade the strongest stock in the strongest sector in a strong market. And I am now on the right side of the money flow. It don't matter what happens. You're moving in the right direction. Now, the reason this is really important is because we build this process out and we do it every day. And we do it very, very, very consistently. Because we're not relying on, this is not Sean's strategy. So let me just kind of repeat this. This is not something that I built. This is not something that some educator built and designed some system. This is coming from more of a quant perspective and saying, let's take a look at the fundamentals of Wall Street and let Wall Street show us what to do today for our business. How many of you guys think that that would probably be more important than trying to put all the pressure on yourself or some random system that someone's trying to sell you? What if I told you that there's more to the markets than most people understand? And when you understand it, you no longer have to guess or fear what you're doing. You may yes that some of you guys would be more open to learning something like that. Okay. like I said, seeing is believing. So this is where the walls are still up. You're like, well, you know, Sean, I don't know about that. Well, I'm going to show you a bunch of trades. And then I'm going to give you an opportunity to come in and watch it live so that we can prove it through demonstration, not through visual, not through auditorial learning. So what we do is we teach traders how to trade in 4 steps. Okay. How many of you guys can count to 4? 1, 2, 3, 4. You'd be surprised how many people lose money going right to step 3 first. So many traders will come into a classroom or they will open up their charts in the morning and they will have the disease of the finger clicking the mouse. Clickety, click, 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 losing the money quickly. The problem is they don't have a process. But here's the thing, traders learn in a linear process. Everybody learns in a linear process. If you learn a language, you learn the basics first. If you learn how to go to the gym, you got to learn how to eat and use the equipment and have a process, right? You don't learn it all at once. You need to learn it in stages. So what we do is we teach you step 1. Once you understand step 1 like a master of the market, you move to step 2. Once you understand step 2 like a master of the market, then you're ready to take the trades. Because if you just start taking trades, you won't believe in what you're doing because you won't feel confident, okay, in your abilities. You won't feel confident in your ability to do it every single day. And then you're dependent on an instructor when really the goal here is to be dependent on yourself to run your business and to write your own financial ship. Okay. So, and there's no point on journaling a trading plan if you don't have a strategy that has consistent returns done over scale of lots of traders. And it's not something that you're comfortable yet doing. There's no point on logging trades if it's a strategy that you've only traded for a day. You need to have something you believe in. So what we do is we give you this framework and we do it with you. You don't have to figure it out on your own. You don't have to learn it on your own. We do this with you. You'll watch us do it. So it's not something that's not going to be covered every day. And then the whole goal here is to get you to the point where you're very, very, very comfortable learning how to trade with us. Okay. Now, I want to show you some examples. These are real trades taken in our classrooms. These are trades that are trades that were taken in front of audiences. These are real fills. You can see up here there was a losing trade here as well, right? There is a loser up here too. Right there, and there was 3 winners, right? I'm not here to sugarcoat it. You're going to see a stop out from time to time, right? You're going to see wins a lot of the time, but you're not going to see something that's unrealistic. Okay, we're going to teach you how to run a business as a trader, not from a marketing perspective, but from a trading perspective. Okay, here's another example of another trade taken. Look, there's a loser in there too. In fact, the loser was bigger than 2 of the winners, but still ending nice and profitable on that trade. Okay. The concept here is that it's about consistency. Okay. Now, here's another example. Really good trade. Look, there was a loser in there too. You notice how that kind of is the thread here. Like, I'm here to teach you that you're going to have wins and losses, but you're going to be consistent if you learn what we do. And knowing how to do it is the key. Okay. Here's another example of another trade taken. Okay. And here's another example of another trade. Look, there's a loser in there as well. You notice how I keep bringing that up? Because a lot of traders think that you cherry pick examples. You can't cherry pick live trading. Like, you just can't do that. You can't cherry pick real life. And that's the problem, is that everybody is afraid to believe that something's very good because of the inconsistencies that's happening, right? I'm here to show you a new way, guys. And if you're giving it an opportunity, I can wow you and I can change your destiny. But you got to come in and learn what we're doing. Okay. Here's another example. Only took 1 trade that day. It was a good trade. Now, I want to show you some other examples. Here's an example of some sector rotation stocks that we traded. PLG was a nice trade. It's a really nice trade. This is a sector model. You see there was a loser there as well. Okay. Here's another example of a really good trade right there. XLI. You notice how it's all kind of the same consistency. We're trading pullbacks in directional markets on strong markets. And we're going to talk about that. You know, here's another example here. Here's another example here for a really good trade off the open on crude oil. That was XLE. That was on an energy market. It's a really good trade. Okay. I want to show you another short that I took, and this is a short that I took in the classroom. This is, take a look. There's the losing trade down below, but it's a break-even trade. I scratched it because it wasn't really a good trade. It just didn't sit in there. It didn't go anywhere. So these are trades that we take, trending trades. We trade trends. We're trend traders. This is a trend trading strategy. And the reason we trade this is because we let the market show us what to trade, and we only trade the 1 or 2 markets every day. We're only sitting there trading 1 or 2 markets to the long side or 1 or 2 markets to the short side. And we're letting Wall Street show us which markets those are supposed to be. We always have a big picture bias. We always know what side of the market we want to trade on. And we always trade the flow. We're not sitting there picking stocks, trying to be the next Johnny on it. Okay, there's no money in that. There's no consistency in that. That's all ego. There's no repetition in that. Okay. One thing you're going to learn with real traders is that they take the guesswork out of it. It's systematic. It's business driven. Okay. Now, yes, we have volume software, and yes, we have order flow software, and yes, we use a lot of other indicators and stuff like that. But my job is to get you making money quickly and efficiently. And then if you want to learn all the other bells and whistles that we have in the school, you can do that. It's a privilege being in our school because you have access to everything at once. And we'll talk about that in a second, because we are the Netflix of indicators and the Netflix of education and trade rooms. Okay. And we're going to talk about that. How many of you guys are swing traders? Can you guys give me a yes if you're a swing trader? I want to know how many of you guys are looking for buy and holds, anywhere between 2 days to 5 days to 10 days. I don't know where you're at. You guys trade swing stocks, options, okay? So we also cover swing analysis as well. If you're interested in learning how to swing the market, we do that as well. Here's the last round of swing trades that I took. And caught some really good trades. These are some really, really good trades, the last round of swing trades. I want to share with you one of the things that we've rolled out in the business, and it's exciting. And you can trade options on these as well. But I want to talk a little bit about something that we've done, and I want to go over an example of the last couple rounds of swing trades that we publish for all of our traders. And we talked about this because we only trade the swing trades in certain environments. So what we do is we let traders know what we're doing and why we're doing it. And, there was a round 1 of stock trades. I'll explain what happens when you come into our classroom. We have a few different ways of looking at helping traders do very well, and a few of them is really dependent on where you're at in big picture. So when we initiate swing trades, we're only initiating swing trades at key levels. Okay. So that was round 1 of the list I'm going to show you. This is round 2 of the list I'm going to show you. Right now, we're not in swing trading territory. So we won't cover swing trades until we get to an area where it actually makes sense to do so. When we get to the right locations, we will actually let all of our traders know we're going to be starting coverage on swing trades again. The first round was solid. We had 29 stocks. We had 18 wins, 2 stop outs, 6 break evens, and 3 half losses. Unrealistic to most traders to believe it's possible. What we do is we take pictures of all of the things we do, and we validate things through validation. We don't sit there, and we're not here smoke and mirrors. Like we plan all the trades out, we map everybody out so you guys know what's going on. And these are things you can expect with us being a part of our school and what we do. Here is the last round we did in big picture. When we came down to the midpoint up here, we came in and I've covered 7 markets. I went to break even on 6, and I let one big one run. I'm going to show you that was the runner that was really, really solid. I cut all of the other trades, and they all would have been profitable. Okay, they all would have been profitable, but I just don't like to hold on to dead ducks. Like if I see a market's getting strong and the stock's not lifting, then I'll cut the trade. Right. And we talk about trade management. We talk about all that. Right. So these are the trades we took, and these are the different things that we cover. But I just want to let you know that it's not just about day trading at the school. It's about knowing that we're really, really good at making money when you understand how to do it. You just need to learn the strategies that we're trading. And we're very, very good at hand holding so that you learn it quickly and efficiently. You know, the big thing here is that some traders are capitalized to trade stocks. Some traders want to use the options. I'm here to tell you that you shouldn't be trading options until you really understand the stock. Once you understand the stock, then it's really about the volatility. So in these situations, if we were going to establish trades on options, I would want to know if volatility was low so premiums are cheap. And we'll teach you that. We'll show you that. So you don't have to learn what that is. But the last thing you want to do is try to figure that out on your own and, you know, be left to your own demise of, I hope this makes sense. Okay. So these trades we cover, we take them, I explain them, we go through them. These are the things you can expect. Okay. And so the topics today is how to scale a small trading account. You can scale a small trading account, day trading or swing trading. It just depends on your preference. And we're going to show you both. The nice part about it is that we do it so that you see it. Okay. Now, I'm a firm believer of communication is key. So if you want to speak to traders, if even after today, you're like, I still want to talk to somebody, I want to feel you out, no problem. We have an excellent rating, over hundreds of users. We've got thousands of students. And all you need to do is drop us an email. You can check out our reviews on Trustpilot if you'd like. But if you want, you can drop us an email, and we've got a whole bunch of people that will gladly share their experience with you. Okay. Now, something that I really think is a differentiator between what we do is we've created an academy chat room social network. So one of the things that you're going to find with NeuroStreet is that traders are left by themselves. When the trade room closes, they're by themselves. So what we do is we create several rooms for traders to communicate. We have platform rooms for different platforms. We have threads for different asset classes. So if you're a stock trader, you can talk to the stock traders. If you're an options trader, you can talk to the options traders. If you're a swing trader, you can talk to the swing traders. If you want to be in our futures room, our Forex room, that type of thing, you can talk to those people too. We also have a place where we place all of our live trading picks and where we post our levels. So a lot of our instructors, myself included, will post our trade levels before we take them for level strategies. And if we're stock scanning, we'll post those trades as well, right? But the nice part about it is that you get to be a part of that by being in the school, and you can talk with a whole bunch of other people and never feel alone again. Never feel like you got to figure it out on your own again. And there's a lot of experienced money in here, guys. There's a lot of very profitable, successful traders that will gladly share with you what they're doing over and above our classrooms. Okay. So I want to talk a little bit about what we've done in the space to kind of help you understand the advantage of being with NeuroStreet, so you can kind of show you where we're going. We made a decision a while back to become the Netflix of trading schools. And we're privileged because we are the largest indicator vendor on 3 platforms in the world. So let me just explain a few things. We are the largest software provider on NinjaTrader out of 500 companies. We are the largest software provider on TradeStation, and we're also the largest software provider on TradingView. As of this week, we've opened up our entire school on the TradingView platforms. So if you're using NinjaTrader, TradeStation, or TradingView, you have access to over 40 indicators that we've built for use on those platforms. Plus, one of the things you're going to have an advantage to is our education classes and all of our live trading rooms. When you become a member of NeuroStreet, you get access to all of our trade rooms, not just one course, not just one program. It's kind of like Netflix. If you want to watch a comedy tonight, you want to watch an action movie tomorrow, you don't have to buy the movie or pay for more movies. You can watch and do whatever you choose to do. We have a lot of traders that trade stocks and options. They also day trade futures and Forex. We've got traders that are trying to learn cryptos, and it's all there, guys. Everything is there. And the best part about it is that we don't charge for all these extra courses. You're in. It's hard to fall off the edge when you're in the middle. Does that make sense? How many of you guys think that you guys could appreciate that? You know, we've got 5 asset classes: stocks, futures, Forex, options, and crypto. And this is a stock event, but you get access to all of it. Okay. Plus 5 days of trading with multiple trade rooms and instructors, and you don't even need to pay extra for it. Okay. So here's what I'm going to do. Okay. I'm going to explain our school programs, and we'll explain the huge deal that we've arranged to offer for the Cyber University, because, you know, as they mentioned, we've done a lot of events with them, and we wanted to do something out of the norm because of what we do and with the relationship we have with the panel. And the key here is explain the total inclusion of the school and then the retail price, and then we're going to give you a discount. Okay, I'm going to share with you the discount so you guys can understand it. When you come into the school, there's 3 programs that we offer. There's no other packages. There's no other programs. It's either in it, you're in it, or you're not. We have intro courses. Okay, we have intro courses, so you understand this. Intro courses, cognitive trader development training, all of the resources, the chat rooms, all of the 5 days of live trading rooms, the education courses, the system courses, all of the pre-built workspaces. This is a big one, guys. This is a really big one for all of the indicators on all of the platforms, all of the training. We'll install everything and set you up. Plus, we can communicate with you, and we can get you on a fast track call with an instructor or one of our more experienced traders, should you choose to need that, if you need it. And in order for you to do what we're doing here, we're going to give you a promotion on the gold program to come into our classrooms and do everything. So what we're going to do, I'm going to explain the pricing so you know the deal. Annually, you can buy our school memberships for $34.90 and you get 2 months for free. Monthly, it's $349. So essentially 1 trade a month. If you can make 1 $349 trade or 2 $150 trades or $175 trades, you've paid for your tuition and you have a career with us. But as I mentioned, you're still in the discovery phase. Maybe you've heard of NeuroStreet, maybe you haven't. Maybe you've been burdened, you've bought some things in the past, or you're struggling, you're not making money, or maybe you just don't have a huge bankroll to be buying a bunch of programs and you're trying to make it work. I get it. I understand it. This business can be expensive, but if you surround yourself with the wrong environment, you will get the wrong results. I'm here to tell you that if you want to come in and watch a very, very experienced traders trade live in front of you so that you can see what they're doing consistently, then you need to be on the inside. That's just the bottom line. So, how many of you guys have heard of The Godfather before? Can you guys give me a yes if you've ever seen Al Pacino in The Godfather or Don Corleone? Give me a yes if you remember this movie. I'm a movie guy. I like movies. I'm trying to cut down on the ice cream and the popcorn as it doesn't really work well for the abs, but you know where I'm going with that. So he always used to tell everybody, I'm going to make you an offer you can't refuse, because everybody would go to him for the solution. I'm here to tell you that I have a solution that truly done correctly will change your life. I'm here to share with that. I'm here to share that. Not some fancy system or indicator, not some new hot technology. I'm here to show you a winning trading system, and we're going to trade it in front of you. And if you'd like to see professional traders do that, you got to come inside. Okay? Plus, you get all the other bells and whistles at the school, but you got to come in and be a part of what we're doing. So I'm going to give you an offer you can't refuse. And literally, you'd have to be batshit crazy not to take this. It's insane. So instead of charging you $349 a month, we're going to give it to you for the price of movie night. If you can afford $25, okay, $25 for the first month, for the next 30 days, if you can afford a $25 movie ticket, it's less than dinner and a movie. It's less than movie night. I'm going to give you a career. We're going to trade in front of you. You get access to everything at the school. And I'm also here to tell you that we will not renew you at the full price, because we're going to send you a discount email halfway through your month. And we're going to say, listen, if you'd like to stay on with NeuroStreet, we're going to give you a discount so you don't have to renew at full price. So you don't even have to worry about renewing at full price, because what we're going to do on this offer is we're going to offer you a discount on the renewal as well. So don't worry about having to renew at $349. I'm here to share with you that we'll give you a huge deal on the renewal as well. Okay. But for $25, I can change your destiny if you give me 30 days of your life. In 30 days, if we have not wowed you to the point of massive influence, there is no commitments, no contracts, no nothing. Just you can go on your merry way and move on. Or you can stay with us and trade with a bunch of really successful professional traders. Okay? So what I'm going to do is I'm going to open up the door for some questions. I think I've come to the part where I don't want to take your entire afternoon from you, but I'd really like the opportunity to trade live with you so that I can teach you how we're crushing the markets. And the best part about it is that it's done every day. Like, it's not something that changes. It's something you can rely on. And you can day trade it, you can swing trade it, you can use stocks, you can use options. Plus, if you're interested in all the other classrooms, the futures and the Forex and the crypto stuff, you just get that for being a part of the school, right? It's a huge, huge advantage, right? So I'm going to turn it over to you guys. I see that the admin has put the, yeah, so that's a great question. Al says, great offer. What is your room schedule every day? Actually, Skip, I'm here to share with you that that's incorrect. So we have intro programs. So we have all 5 intro classes that's part of this. So you'll come in and you'll learn the basics. We've got intro programs for every asset classes. So you'll have 7 videos for stocks. I think there's 8 for options. There's 6 for cryptos, 4 for Forex, and there's 6 for futures. So we have intro courses. It's part of all of this. So there's a beginner section as well. And there's intermediate classes, there's advanced classes, plus live trade rooms, plus all of the software and the systems to get up and running. And we do everything for you. We are an academy. This is not a Sean's trading room. I run multiple trade rooms with multiple instructors. We've got portfolio managers that manage swing trade services for large family offices. Like, you're in the right environment. You can't fall off the outside if you're on the inside. Okay. Room schedule is 5 days a week, but we rotate. Futures and Forex on one day, stocks and options on the next. Futures and Forex on one day, stocks and options on the next. We are looking at opening that up to being more coverage, maybe, depending on request. But yeah, you get 5 days of trade room. If I'm interested in scalping SPY options, would this education be appropriate? Actually, Ralph, no, it wouldn't. We're not scalping options in our classroom. You could trade them. You could trade them if you were trading options. We do cover options a lot in our classroom, but we don't encourage scalping options for a lot of reasons. We make a whole lot more money trading other strategies. And 90% of most traders are not very successful day trading and scalping options. Not that you're not, but the masses aren't. We run the room from 8:30 Eastern pre-market before the pit open for crude oil, and we run it all the way to the European close. So we trade the US session for the morning. Yeah. Okay. So all I'm asking is that if you're real serious about trading with a bunch of real serious traders who will trade in front of you and show you what they're doing, for $25, we can shift your paradigms and give you a career. And all you got to do is come in and get yourself acclimated. As soon as you come into the school, we can schedule an install. We can schedule everything and get you up and running, guys, because at the end of the day, the fastest way to success is a straight line, right? There shouldn't be any fumbling with technology or installations and all that. We'll get you up and running quickly and efficiently. Okay. So I want to thank the Cyber Trading University for bringing in NeuroStreet. We always have a great turnout with you guys on our panels and us on your panels. Obviously, all of you traders, you're the reason we're here. If it wasn't for you, we wouldn't be here. So thank you for your attendance. Thank you for your interest in our passion. And, I really hope to see a lot of you guys coming into our classrooms because, we really can help you, and look forward to the opportunity, traders. So I'll leave it at that. Traders, have a fantastic afternoon, and thanks for being here.
Thanks for coming, and hopefully everybody enjoyed Sean's presentation. Take him up on his offer. I think that was a pretty cool deal. Listen, you should all try a little bit of everything like we tell you, and worst thing that could happen is that you learn something, and find out it's not for you. That's not a bad thing. But anyway, that ends our Cyber Trading Expo, and we look forward to seeing you back again next month for our next upcoming Expo or any other upcoming events that we have going next week. And like I said, hopefully see you all in the trading rooms. Good luck, everyone. Enjoy your weekend. See you then. Bye-bye.